Welcome to the European market open a minute to go until the start of cash equity trading. I'm Tom McKenzie in London. And here are your top stories. Unconditional commitment. Jay Powell again vows to beat inflation, while Fed Governor Michelle Bowman backs another 75 basis point hike. Stocks move higher as Treasuries trim gains. And double defeat. UK Prime Minister Boris Johnson suffers heavy losses in two special elections as the chair of his party quits. Historic step, the European Union grants Ukraine candidate status, while EU leaders devise strategies to weather Russia's gas supply cuts. Okay, let's take a look at the futures then. You had some decent gains overnight on Wall Street. Currently, the futures pointing to gains of 0.6%. We had that very soggy Eurozone PMI data out yesterday. We had the politics of the UK back in focus. Let's see how things are going to open up this Friday then, as we weigh up, of course, what seems to be some kind of consensus around the trajectory then of rate hikes, at least according to the voices we've heard from this week. 75 basis points from Bowman. That is the expectation for the next market move, the next rate hike move, I should say, from the Federal Reserve, followed by 50 basis points until you see inflation starting to come down. The Spanish IBEX up 0.2%. Here in the UK, the FTSE 100 gaining 17 points at 7,037, just currently up through 0.3%. We can switch it on and see how things are playing out across the markets. On the UK front, of course, you did have the politics of the fact, as we said in the headline, two significant defeats in those by-elections for the Prime Minister, and of course his future will once again be called into question. The future stateside pointing to gains of 0.7%. The context is that the Nasdaq has stabilized somewhat over the last 30 days. It is still down around 28% year to date. The US 2-year, 299 now, so back below that 3 handle. That's the last time it got to 3, was back on June the 10th. It's now below that level. And then, again, according to the context of this, the yield move that we've seen, we're still talking about 230 basis points year to date in terms of the yields moving higher on the US 2-year, but there has been some stabilization on the back of the comments that we've had and the testimony from Fed Chair Jay Powell. The pound in focus on the back of retail sales and consumer confidence that fell to a fresh record, 123, are currently unchanged in terms of the pound. Brent 109, and you're looking at losses of 0.2%. Again, of course, oil has been under pressure over the last couple of weeks and could end the month lower. Now, we are also looking, of course, at individual stocks that are on the move, and we bring those to your attention as well. AIB, so there's the announcement from the Irish government that the share trading plan that had expected to end around July the 10th will be extended out into January. We'll see what effect that has on that stock as well. We'll keep you across that one. Eni, and delaying plans to list and to IPO its renewable energies business because of the market volatility that we are seeing. The Italian oil giant currently down 1% on the back of that news. Zalando expect a big move here because they have downgraded their forecasts for the rest of the year, citing very challenging market environment, very challenging conditions, of course, around inflation and consumer confidence. We'll get back to Zalando, of course, listed in Germany shortly. Let's get out now to Mark Cudmore of our MLive team, of course, managing editor. Mark, what are you looking at in terms of particularly the US economy on the back of that testimony that we've had from Jay Powell and his commitment to get inflation back down to that 2% target?
Yeah, Tom, good morning. This is really the week that we switched from worrying very much about inflation and higher yields to about recession risk and how soon that will come, particularly in the US. And one of the big reasons for this is because some of the really disappointing data we've seen recently. So this is the Bloomberg US Economic Surprise Index. Now, this chart basically shows how data is coming in relative to forecasts. It's not saying that when it's in negative territory, it's bad data. In positive territory, it's good data. It's just relative to forecasts. But as you can see, we've now slumped to the lowest level in more than a year. And that means the data has surprised people by how quickly it's come down. And that's why this idea of a recession has really got traction. And I think as we go into summer markets, we lack a clear macro catalyst on the calendar for the next couple of weeks. I think that kind of trade has momentum. That idea of bonds continuing to rally, stocks continuing to rally for another couple of weeks. I do think it's fragile later on this year because inflation isn't going to go away. Recession risks might be slightly overhyped. And this is a mean reverting index. So as economists start downgrading their forecasts, data starts beating up again. And I think later on this year, we'll realize the recession is maybe not as close as we think it is this week.
Okay, Bloomberg's MLive managing editor Mark Cardmore looking at the economic data there in the context, of course, of continuing and rising concerns about a recession, maybe further off, Mark says, than some had expect. Now, back to what we heard from Fed Chair Jerome Powell, once again promising to do all he can to curb runaway inflation during his second day testifying before Congress.
Inflation is happening everywhere now. More of our inflation is from demand, and we do have tools to deal with demand. Our tools they're blunt, but they are the right tools to deal with broad aggregate demand. We're very far from our inflation target. Our intent, of course, is to bring inflation down to 2%. Inflation getting back to 2%, get inflation back down to 2%. It's unconditional. Our commitment is that path has gotten more and more challenging thanks to the effects on oil prices and food prices. People do expect inflation to come back down to levels that are consistent with our price stability mandate. Without that, we're not going to be able to have a sustained period of maximum employment.
Meanwhile, Fed Governor Michelle Bowman added to the hawkish chorus, by backing a 75 basis point hike in July, as well as increases of at least 50 basis points in the next few meetings. Let's get into some of the key market drivers then and the analysis on the commentary you've been hearing from Fed officials with our MLive reporter Simon White. Simon, good to have you in the studio. What is your takeaway from the 2 days of testimony from Fed Chair Jay Powell and the increasing voices pointing to 75 basis points at the next meeting, then 50 basis points there until inflation starts to come down? And I guess that's where the uncertainty lies.
Exactly. So I think with the Fed, there's what they should do, and there's what they will do, and there's what people think they'll do.
Yeah.
When it comes to what they should do, I think they will need to raise rates way higher than anyone's expecting right now.
Would give us a sense of the level. 3.4% is what the dot plot says.
So 3.5, 4 is where we're priced now. We're talking 5 or 6 plus, like 5 percentage points additional tightening.
Within what kind of time frame?
Within the next 6 to 12 months,
okay.
I would say. But they're not going to do that, right? Because they're not going to strangle the recession or the economy to the point that they need to do that. So they're not going to do that. They're going to probably tighten for a little bit more, but to the point where they don't do enough to really put inflation back in its box. So the market is probably 3.5, 4%. Maybe we get to that point. But by the time we get to the midterms in November, inflation's probably going to be coming down. At that point, the political pressure will probably ease. They will be able to pull back a bit because employment's starting to rise. But the thing is, inflation is probably going to come back. It probably will make like a higher low. This is what happened in the 70s, by the way. It came back. They had the recession, but then it made a higher low, and then it started to rise. And it wasn't until the late 70s you had a different mandate from a different Fed governor, Paul Volcker, who really needed to raise rates to the point where they could properly put inflation back to where it came from. But we're nowhere near that point in the cycle yet.
So it's not quite a Volcker-like scenario yet.
We're not there yet.
The risks are there. In terms of the commodity space, you have seen some easing, of course, around oil prices, iron ore, copper, in the last few weeks. Does that suggest that maybe some of the elements that feed into higher prices and inflation are starting to ease, that maybe we are starting to see a peak?
You're starting to see like an interim peak, and this is the way inflation.
Interim peak.
An interim peak, exactly. So I think people are thinking on a medium-term scale. You'll definitely see some easing, right? You're going to see some cyclical easing, but the structural side of inflation, which is the really entrenched part, if you look at the number of subcomponents in CPI that are persistently rising, that's more than 50%, which is the highest it's been since the 70s. So you're really beginning to see some underlying kind of entrenched nature of inflation. I don't think the Fed or really the market has really cottoned on to how big a potential problem this is.
And how entrenched this is already already becoming.
Exactly.
All right, great insights. Simon White, thank you for coming to the studio from our MLive team, of course, running through some of the key market themes and the focus once again on the testimony of Jay Powell and what it means about our expectations around the rate hike cycle. Joining us now for more analysis is Joos van Linders, Senior Investment Strategist at Van Lanschot Kempen. Joos, good morning. Thank you for joining us. I'm not sure if you were able to hear our MLive expert there, but do you share the same view that more needs to be done by this Federal Reserve? 75 basis points seems to be in the cards now for the next meeting, followed by 50 basis points. That is what officials are signaling. Is that going to be enough, do you think, to get inflation back to a point that they will be comfortable with?
Yeah. I think, as the analysis just said, that at some point you'll see inflation coming down, and then the Fed will probably slow down a little bit, especially because the economy will slow. And actually, when you look at the market reaction, basically the past few days, and the fact that sort of the next meeting we will see another 75 basis points, what you see is that markets are sort of starting to discount a very aggressive Fed in the near term. That's slowing down the economy, which should alleviate inflation, at least to some extent, and then the Fed can slow. So actually you saw 10-year yields dropping even a little bit because of a more front-loaded Fed, so more aggressive now, and then maybe they can ease up a little bit later on.
Yeah, and on that point, we're currently seeing the US 2-year at 298. Of course, it started the year at about 73 basis points, now at 298, back below that 3%, and it's lower by close to 3 basis points in the session today. We also heard from Bill Ackman, of course, of Pershing Square, saying that the bond markets are misreading the hawkishness of Powell and his colleagues on the FOMC because of the communication style of Jay Powell. And he thinks there needs to be further pricing in these bond markets. They're getting it wrong, is the call from Ackman. Do you agree with that?
Yeah, I think yields will go higher. Actually, when you look at the bond markets, the 10-year, but also the inflation market, the inflation expectations, that's all pretty much that inflation is quite temporary, and that might be longer lasting. All the talk about sort of 1970s style stagflation environment, I'm not too convinced of that. Then you need a wage price spiral, longer term oil prices higher, and so on. So I'm not sure if we're there. But yeah, actually, when you look at the bond markets and what's priced in, that's a pretty benign scenario. That's very much sort of the soft landing, everything goes right scenario. And that's what you also saw in equity markets today. A lot of the decline in equity markets so far this year is valuation, driven by higher yields and higher rates. So on a day like this, when you get a bit of a retreat there, you have a bit of gains in equity markets, a bit of stabilization at least.
Stabilization, and indeed, some will take the view that given what we've seen in terms of commodity prices coming off, the break-evens falling, and some stability within the equities markets, that maybe this is signaling that this is the worst. The worst is behind us in terms of risk assets. It sounds like you don't share that view yet.
Well, so we have two risks. One, still higher yields. The bulk of the risk is probably behind us there, but then you have earnings. And when you get that sort of recession risk increasing, you might get a bit of easing of that risk of higher yields, but then you get the risk for earnings. And when you look at earnings, something like roughly 10% this year, US 10% next year, Europe a bit lower. That's still pretty strong earnings growth. And so earnings are very much driven by nominal growth, and nominal growth is due to high inflation. But I also think because nominal growth is such a large extent inflation, and real growth will slow down, maybe come to a standstill in Europe, that it might be difficult to achieve those earnings estimates. So if the risk of recession rise, that risk for the equity markets goes more from higher yields towards disappointments in earnings.
Okay, the question of earnings, we want to unpack that with you in greater detail after the break. Get more of your calls as well. Joos van Linders, Senior Investment Strategist at Van Lanschot Kempen, stays with us, I'm pleased to say. Now, one stock that is significantly on the move today is Europe's biggest online fashion retailer, Zalando, currently down 16%. The context is this stock is down around 70% year to date. The reason for today's move, they put out a statement downgrading their forecast for profits, profit warning worse than expected, and citing the macroeconomic challenges likely longer lasting, executives have said, than more intense than anticipated. So a further big move lower for Zalando, again, Europe's largest online retailer. Year to date, down 70%. This is a drop of 16% we're seeing on the day. We'll keep across that story. It's just a reminder, of course, of the pressure that is on many of these companies with higher input prices and, of course, cost of living and consumers feeling the squeeze. Coming up, British Prime Minister Boris Johnson suffers two humiliating election losses. We will talk UK politics and economics. Cost of living is certainly part of that. That is next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Happy Friday. Welcome back to the Open. We are 16 minutes into European trading day. You're seeing some cautious optimism. 0.5% of the gains you're seeing across the benchmark after the losses you saw across Europe yesterday. The growth, of course, picture being put firmly back in focus yesterday with weaker than expected Eurozone data. Here in the UK this morning, consumer data, consumer sentiment falling, as well as retail sales coming in slightly better than forecast, but still contracting. In terms of the UK, the FTSE 100 currently down 0.4%. Across the sectors, it is a bit of a defensive tilt, even if it is a little risk on media, utilities and healthcare at the top of the list. Future stateside pointing to build on the gains that we saw yesterday. 0.4% for the S&P minis, 0.6% in terms of the gains that you're looking at on the Nasdaq futures. Right, let's get to the UK then. Retail sales sliding in May as rising food prices and the nation's cost of living crisis hurt spending, with consumer confidence, as I mentioned, also dropping to a record low. In another blow to Boris Johnson, the chairman of the Conservative Party resigned after the party lost 2 key parliamentary seats just in one night. The elections raised fresh concerns about Johnson's leadership and his faltering appeal to voters. Joost van Lienden's senior investment strategist at Van Lanschot Kempen is still with us. Joost, the FTSE 100 UK equities, something of a relative safe haven year to date, and we can talk about the linkages or the lack of linkages to the real economy here in the UK between the FTSE 100 and what is happening in terms of the fundamentals. But is there a lack of political risk? Does more political risk need to be priced into UK equities at this point, or is the pound already articulating those concerns?
Yeah, the pound is, and when you look at UK equities, it's obviously very much dominated by international companies. So I think for a lot of European countries, especially the equity markets, are not necessarily linked to the domestic economy. UK is a bit of a value play with some commodities, with financials and so on. Yeah, I think political risk is probably more in the currency at the moment than in the equity markets. Yeah, I think the biggest political risk is probably around the final arrangements around Brexit and what's happening there, and that could have an impact on UK-European trade, which is probably also more negative for the UK economy than for the UK equity market, given that that's a very international market. But you could argue that in the equity market, it's probably not fully priced.
Okay, so that's a region when we're breaking out the regions. When it comes to sectors used, you are still positive commodities. Can I just check that you still maintain that view after, what, a 7% drop in Brent over the last month or so?
Yeah, so that is interesting how long that will hold. I think there's a bit of a buffer because when you look at the energy sector, absolute and relative, it had lagged oil prices to some extent. So there's a bit of a buffer there. And energy prices can be volatile. We know that there's a lot of energy off the market from Russia. But I think what also is at play here, it's not just the oil price. When you look at gasoline prices and most refined product prices, they are pretty high. So the margins for refiners are very high, and that is due to dropping out of capacity in Russia, but also China, which wants to reach its climate goals and is exporting less refined products. So it's not just the oil price, it's also the margin that can be made on that oil price, and that is pretty high at the moment.
Just briefly, anything you like in credit, seeing as the blowout in years we've seen, some looking, for example, at the credit markets, some analysis pricing in 6% defaults. Historically, you're getting more like 1% in investment grade. Is it an opportunity to get in within the higher quality investment grade credit at this point?
Yeah, we haven't done so. I think you have the risk, the credit risk is one part, and the other part is obviously the underlying yields. And we think that the risk is there too high. And so yes, in the safer parts, you benefit from the lower credit risk basically, but you have a bigger duration risk, so a bigger risk for rising yields. Generally longer duration, and it's a larger part of the overall yield. So we haven't moved into credit yet, given basically that duration risk, also that risk of higher underlying yields, which is still there.
Okay, Joost van Lienden, we appreciate your insights. Not quite ready to jump into credit yet. Still need a bit more time on that. Senior investment strategist at Van Lanschot Kempen, thank you. Also coming up, Wall Street's biggest banks, well, they can withstand a severe recession. That is according to the latest Fed stress test. We discuss that next. This is Bloomberg.
stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Welcome back. We are 24 minutes into the European trading day. Modest gains across the European equities of around 0.4%. The futures in the US looking to build on the gains that we saw yesterday. S&P E-minis up 0.5%. We've seen a decent move into the short end of the yield curve. You're seeing a drop of around 5 basis points on the US 2-year, now at 2.96, so comfortably below that 3% handle at this point. Gilts also bid, as are Italian BTPs, down 3 basis points on the Italian BTP at the 2-year, 132. Let's get back to what is happening on Wall Street then. The biggest banks in the US are set to return tens of billions of dollars to investors after all pass the Fed's annual stress tests. Joining us now is Bloomberg's finance reporter, Nick Comfort. Nick, what does this tell us then about the health of US banks as concerns about recession move front and center?
So the good news is they're really well capitalized. They've been building up financial reserves since the financial crisis, also because of tougher regulation. So they have that big capital cushion, and they can afford to then pay out on some of the excess capital. The bad news is that these stress tests, I think they have a long lead time, and they focus on the last set of risks. And so if you look at the design of the stress test, it's very focused also on the issue of commercial real estate. What happens if the pandemic was to extend and there was to be more working from home? And let's face it, that's not the set of risks that we're most worried about at the moment. We're most worried about the fallout from Russia's invasion of Ukraine. What does that mean for commodity traders? What does that mean for various markets? So it's a different set of risks than they were tested for. But yes, this is a stable position to be at the outset.
Okay, some stability there when it comes to US banks. What about the read across to Europe and whether or not European banks are in a position to start extending further dividends and maybe announcing new buybacks?
Yeah, there's the catch. So a lot of the banks in the test are European banks, Santander, Deutsche Bank, BNP, and they have all passed with flying colors. But traditionally, European banks have kept really high capital cushions in the United States because they didn't do so well on the qualitative aspects of the stress test in the US. Now, the qualitative aspect isn't there anymore, but still, I think it would be reasonable to assume that they have to hold on to large capital cushions in the US. And so we can't necessarily think that there's going to be a read across.
Great insights. Thank you. Finance reporter Nick Comfort on the stress tests and the success of those US banks. Coming up, we break down the UK politics, the implications. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done, uses a small sample number, and most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are the top stories. Unconditional commitment. Jay Powell again vows to beat inflation, while Fed Governor Michelle Bowman backs another 75 basis point hike. Stocks move higher as Treasuries trim gains. And double defeat. UK Prime Minister Boris Johnson suffers heavy losses in 2 special elections as the chair of his party quits. Historic step, the European Union grants Ukraine candidate status, while EU leaders devise strategies to weather Russia's gas supply cuts. Let's check in then on these markets. It was a positive handover from both Wall Street and Asia, particularly pronounced around Chinese tech stocks, although we know the volatility there listed in Hong Kong. But Japan stocks have done well as well in the session today. The read across moderately positive here in the European space after the losses we saw in Europe yesterday, gaining 0.5%. The DAX just hanging into some very, very slim gains, not convincing in any shape or form. The FTSE 100 up 0.5% or 36 points. Of course, the politics will break that down and get into the details shortly, but also you had consumer sentiment falling to a fresh record, retail sales contracting less badly than expected, but still decreasing, I should say, contracting. Let's switch it over and see how things are playing out sector by sector. You're getting both a bid for bonds and a modest bid for equities, so mixed messaging from these markets. At the bottom of the list when it comes to these sectors, retail, auto parts, energy and basic resources. We know that the energy sector has been under pressure. Oil is lower over the last few weeks. A bit of a safe haven move then when it comes to utilities and some of the sectors that are in the green. Utilities and healthcare, 2 of the favourite sectors for many strategists in these volatile times. So that is how things are shaping up this Friday, 30 minutes into the trading session, as it becomes clearer that 75 basis points is next in terms of the rate hike from the Fed, and then 50 basis points seems to be what we're hearing from officials. And of course, we have the important University of Michigan survey out later today. It was the consumer and it was the sentiment expectations around inflation that seemed to be central to the change in the Fed earlier when they went from 50 to 75 basis points. So look out for that later today. Let's get back to UK politics now. And it is a double blow for the ruling Conservatives overnight with 2 defeats in special elections. Oliver Dowden has resigned as the chairman of the Conservative Party this morning, saying, quote, "We cannot carry on with business as usual." But while the results raise fresh questions surrounding Boris Johnson's election winning potential, the Prime Minister has vowed to carry on.
We've had some tough by-election results, and they've been, I think, a reflection of a lot of things, but we've got to recognise that voters are going through a tough time at the moment, and I think that as a government, I've got to listen to what people are saying.
Okay, for more, we are joined from Westminster by Bloomberg's Laura Wright, who's been on the ground for us all morning. Laura, just how bad is this then for the Prime Minister?
It's been a terrible night for the Prime Minister, Boris Johnson. Voters expressing their discontent at the ballot box. Some of them have even gathered here behind me at College Green. The resignation of the Conservative Party chairman, Oliver Dowden, is being seen as a distraction from the real problem that is Boris Johnson. And if we take a look at some of the details, Wakefield in Yorkshire returned to Labour with a 12% swing. It was one of the red wall seats that the Conservative claimed back in 2019 with a Get Brexit Done mandate. In Tiverton and Honiton in Devon, the result is being called a political earthquake. It has been a Conservative stronghold since 1920, and the Lib Dems have managed to overturn a 24,000-seat Conservative majority. It's the third seat that the Lib Dems have taken from the Conservatives in the last 12 months. Boris Johnson clearly the walking wounded, and these losses are fueling rumours that Conservative MPs are vying to orchestrate another vote of no confidence in the Prime Minister ahead of the usual 12-month wait time from the last.
To what extent, Laura, is the cost of living crisis that we talk about so much and that is so prominent now across the headlines of British newspapers reshaping then the political landscape?
UK citizens' incomes are being squeezed, and consumer confidence data overnight reached a record low, -41. To put that in context, Tom, usually -30 is a bearish recession indicator. This adds to a week when UK inflation data reached a 40-year high within a whisker of double digits. Real wages are falling, purchasing power is diminishing, national strikes are on the cards over summer, and the latest YouGov general election voter intention poll shows that the Labour Party retain a 6 percentage point lead. But all that said, Boris Johnson is known to make a cat with 9 lives look mortal, so don't underestimate the Prime Minister. Tom.
Do not underestimate the Prime Minister. There we go. Bloomberg's Laura Wright on the green for us, breaking down those important election results. Thank you. Now with us is Conservative Member of Parliament Sir Roger Gale, and of course a pretty well-known rebel as well within Tory ranks, and a pretty powerful Tory rebel as well. So Roger Gale, thank you for joining us this morning. Just start off then with your analysis and your views of the election results that we've seen overnight and what it means then for Boris Johnson.
It's a devastating result, there's no doubt about that. Losing Honiton and Tiverton is very bad news indeed. The other seat was not entirely unexpected. But the scale of the swing in the West Country, nearly 30% swing, is colossal. And the curious thing about this is that this is a vote of no confidence in the Prime Minister. Certainly policies, cost of living increase, cost of fuel increase, and other policies have had an impact. But this is very personal indeed. Unusually, we're voting against a person, not against a policy.
And you've made it very clear, and you were one of the first out of the gates on this, that Boris Johnson, the Prime Minister, should step down and should go, and presumably you're not changing that view. What is the sentiment amongst Tory rebels at this point, and what are the next steps?
I can't tell you what the sentiment is because I'm in East Kent, in my constituency, and not in the tea room of the House of Commons. In fact, the House isn't sitting today, so I don't know what the mood of the party is. I can only speak for myself, and I wouldn't wish to try to speak for colleagues. But I think the resignation of Oliver Dowden as the chairman of the Conservative Party is very significant indeed. Oliver is an honest and he's a decent man. He's quite clearly taken the view that he can't go on defending the indefensible. That being so, it remains to be seen now what his cabinet colleagues will do. Will they follow suit? But will they stick with the jobs they've got? That could be very telling indeed, because quite clearly the Prime Minister is determined to blunder on or bluster on as best he can. Others, Margaret Thatcher went, Theresa May went honourably. This Prime Minister is not going to do that. He seems to be determined. He's got his hand, I think, glued to the door handle of number 10 with Araldite. It's going to take a lot to prise him out of it. But the fact of the matter is, he says he's listening to the message. Well, the message is go.
Sir Gale, would you be in favour at this point then, given what you've said, of changing the 1922 committee rules to allow another vote of confidence?
I don't believe in changing the rules in the middle of the game, unlike the Prime Minister. So the short answer to that is no. But, and there is a but, if the Privileges Committee in the autumn were to fight against the Prime Minister and suspend him from the House of Commons, and if at that point he were then not to resign, then that, I think, would be a tipping point and we'd have to change the rules.
Okay, so that potentially is another, or is the next elephant trap, as you've described, for the Prime Minister looking forward. You touched on the success of the Lib Dems, or at least the failure of the Conservative parties in the south of the country. How much of a risk is that, particularly for ministers within this government? Who do you think is most concerned at this point about a resurgent Liberal Democrat Party?
Well, the Prime Minister ought to be concerned for a start, because his constituency in Uxbridge has a fairly slender majority, and he would be wiped out, completely wiped out under these circumstances. The West Country of England has a very strong, old-fashioned liberal tradition with a small L. My father was a liberal, but not a liberal Democrat. He was an old-fashioned English liberal, Whig, if you like. And they are now one nation Tories, as indeed I am myself. And I think there's a strong feeling that this Prime Minister has trashed the reputation of the Tory party for honesty and decency and compassion. And we want to get back to one nation conservatism. That's what we're fighting for. We're actually fighting for the soul of our party. And that's why I am speaking as strongly as I am, because I believe in what I'm saying. But please understand, I'm not speaking for other people. I'm saying it for myself and my party, of course.
Do you think it's incumbent then that cabinet ministers need to take a deep look at what is happening, and it needs to be a cabinet minister or two or a number of them who resign? Is that the next breaking point potentially? Is that when we get to a point where the Prime Minister is forced finally and compelled finally to step down?
I'm not going to try and tell my cabinet colleagues what to do. They're grown-ups. They have to make up their own minds and take their own decisions. And no doubt they will do that. But we cannot go on like this. We've got good potential leaders waiting in the wings. One of those will emerge and will lead us into the next general election. But of this, I'm absolutely certain. Mr. Johnson will not be leading the party by the time we go into another election.
Of course, the people around him, Boris Johnson himself, would cite, of course, what he would call a successful vaccine campaign, his role, of course, in supporting Ukraine, and many others as well would point to the relative weakness of the opposition Labour Party in failing to capitalise on some of the controversy surrounding the Prime Minister. Those would be the reasons, they would argue, to keep him in place.
The government has done some good things. Nadim Zahawi played a blinder in getting the vaccine rollout done. The Defence Secretary, Ben Wallace, has done a superb job in seeking to get military aid to Ukraine. There are lots of things that we're doing very well. Rishi Sunak's policies are designed to help people through the cost of living crisis, and I think he's doing a good job. So it's not all bad news. Unfortunately, the bad news is the character of the Prime Minister.
So, Gail, just very briefly before we let you go, do you have a favourite candidate to take over from the Prime Minister?
No, I'm not playing the bus game. The bus game is, if the Prime Minister goes under a bus, who do you vote for? Somebody will emerge, there will be a contest, and I will make my view, as you would expect, known when I've decided who to support. But at the moment, there's any one of half a dozen of people who would be very good at doing the job.
Okay, not playing the bus game, but we appreciate your insights and your analysis, of course, given your experience and, of course, sticking to that call for the Prime Minister to step down, particularly in light of the most recent election results. Roger Gale, Conservative Member of Parliament, thank you for joining us this morning. Coming up, we are in Brussels for day 2 of what has been an historic EU summit with Ukraine and Moldova formally placed on the path to union membership. Topping today's agenda, energy security. We've got more on that story next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA. is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
I am fully convinced that Ukraine is European nation because they prove every day by fighting against the aggressor that they defend European values, they defend democratic values, and so they are fighting not only for their freedom, they are fighting for our freedom, for the freedom of European Union too.
Yes, we can. The changes that we're seeing taking place in economic performance are to be expected. All of these changes were acknowledged by risks by ministers, by the Commission, by the ECB. And what we'll be doing today is reviewing the steps that can be taken, how we can implement a recovery plan within the European Union to support those economies who need the support the most, and then how we can have the right overall budgetary policy for the euro area in 2023. So it is a risk, but yes, we can avoid it.
Okay, you heard there from Lithuanian President Gitanas Nausėda and Eurogroup President Pascal Donohoe speaking to Bloomberg's Maria today at the Brussels summit. We cross over now to Maria, joins us from day two, of course, of what is and shaping up to be an historic summit of European leaders after yesterday's granting of candidate status to both Ukraine and Moldova. Maria, how significant is this move in reality? What is the material impact and what is the time frame for getting both of these nations into the EU?
Well, Tom, this was widely expected, but nonetheless, we shouldn't really lose sight of the importance of this move yesterday, that endorsement by the EU27 for the candidacy status to Ukraine. Remember, for years, this was the centerpiece of the Ukrainian foreign policy. They have campaigned for this for years. Of course, yesterday, that decision is very historic in nature. I was struck by the words of the French President Emmanuel Macron yesterday. Remember, this is all happening under the rotating presidency of the EU that is led by the French, in which he said, I recognize, quote, that a lot of this was accelerated as a result of the war. Had it not been for the invasion, maybe we would not be here today making this announcement and making this decision. But nonetheless, it is historic, and again, goes back to what is the fundamental point here, that major miscalculation by Vladimir Putin, the way that this has already changed and changed dramatically so many pillars of European security. Now, in terms of what is the real change for Ukraine overnight? Well, you know, I would say there's, of course, a political victory that comes with this for Zelensky, for the Ukrainian government, for the Ukrainian people too. You could say this is a boost of morale, particularly now as we see the fight in the east really becoming ever so brutal. But in terms of this full membership, I think we need to remind everyone that this is a very long, at times very tedious, transformation, transition. At times, there's countries, of course, that get stuck in between for years. years, potentially decades. So the fundamental changes perhaps may not be appreciated over the short term. And of course, we know that for Ukraine, this is also a story about making reforms. We know there's issues around rule of law, corruption. Not everything is perfect in the country, but nonetheless, this really is a historic decision. And again, going back to that point, we will not be here had this not been for the Russian invasion of this. So it really has accelerated this fundamental changes in Europe.
Okay, fundamental changes that are being watched closely, of course, and being passed by Bloomberg's Maria today on the ground in Brussels for us. Thank you. Let's get to the Bloomberg First Word News now with Alice Atkins. Alice.
Morning, Tom. The US Senate has passed a bipartisan gun safety bill, legislation hailed as the biggest breakthrough on the issue in decades. It aims to improve background checks, secure schools, and fund states to combat gun violence. The bill now goes to the House of Representatives. Just hours earlier, the US Supreme Court struck down a New York law limiting public handgun carry laws, a ruling that could mean more guns on the streets of big cities. The US is to provide another $450 million in advanced weaponry and aid to Ukraine, adding to its multi-billion-dollar effort to help push back Russia's invasion. The new package includes patrol boats, cannon shells, and rocket systems. The US says security assistance since the war began now totals more than $6 billion. Sources say members of British rock band Pink Floyd are seeking at least $500 million for their music portfolio. The group is said to have narrowed the list of potential buyers to 4, including Warner Music, Sony, and BMJ. The deal could be one of the largest sales in music history. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom?
Alice Atkins, thank you very much indeed. I love that story. Did you know, Brick in the Wall, they got some Islington school kids, North London school kids, to sing the choral part of that. There was a bit of dispute over payment. The kids didn't get paid back in something like the 1980s. Anyway, coming up, despite a brightening mood towards China tech on trading floors in New York and Hong Kong, industry insiders, they are signaling that there's danger ahead for the market rally. We've got the details next. This is Bloomberg.
And behind me, you can see SpiceJet 737 MAX aircraft. Because it is the only Indian operator of Boeing 737 MAX planes currently.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
would like to safe drive for the investment. We are not stopping, but we are very much careful, even more careful and focused on the move of the Chinese policies.
Okay, SoftBank's chairman there, Masayoshi Son, telling shareholders today that he's adopting a more cautious approach towards investing in China. A man, of course, who has very rich experience and long experience in investing in some of China's biggest names, including Alibaba. He's not the only one. While the move towards Chinese technology companies is brightening across trading floors in New York and Hong Kong amid the sector's recent recovery, industry insiders, they're a little bit more wary of China tech. Joining us now is Bloomberg's Asia technology reporter, Huang Jiping. Jiping, important reporting, important context, given the upside that many investors are now seeing in Chinese tech. Talk to us about what investors, what insiders are seeing as increasingly investors start to turn positive on Alibaba and Tencent.
Yeah, we talked to over a dozen tech startup founders, executives, and also VC investors for this story to sort of get a reality check on the ground. So yes, the crackdown is easing, but it's not over. So what happened over the past 1.5 years has changed China's tech industry forever. So a couple of things. The hyper growth of the past 2 decades will be gone forever, and the big giants like Tencent, Alibaba, and ByteDance, they are sort of being more cautious in terms of their expansion, and in some cases, they laid off staff and streamlined their non-core business. And also, some startup founders on the ground also worry like maybe the government only paused the crackdown because they needed the tech sector to boost the economy. Also, one last thing is that the VC money is also looking elsewhere, maybe in other countries like in the Southeast Asia regions or in other sectors like hardware.
Okay, so a combination of concerns then that exist within the sectors, within those investors as well in mainland China. Is there any kind of silver lining that you sensed having had these conversations?
Yeah. I think people are watching out for like 3 major events, sort of like the decisive moments that will really show the crackdown is like maybe not over, but like fundamental change. One is about Didi, because you know the ride-sharing app was taken down a year ago. If the app is back on the Chinese app stores, that will be a major improvement. The other thing is about Ant Group. So we reported this week, Ant may submit its application for a key financial licensing for its reorganization as soon as this month. So if the central bank accepts its application, that will be a big positive for the whole like fintech industry. And the last one, maybe like longer down the road, is about like ByteDance, the ByteDance IPO. This is the world's most valuable startup. If it can go to the like public market, and it will be a win for all the like private startups in the sector.
Okay, fantastic reporting as ever from Huang Jiping and the team. Thank you for breaking down, and also a look ahead to what to watch in terms of Didi, Ant Financial, and of course ByteDance, the owner of TikTok, as Jiping said, as Jiangping said, the most valuable tech company in the world right now, not listed. Checking in on the markets, you're seeing gains of 0.7%, slightly more positive and slightly more convinced across these European markets. Stateside, S&P EMI is pointing to gains of 0.7%. Stay with us. This is Bloomberg.
worries about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
We are all unique. Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
It's unconditional, our commitment is, and the reason is
runaway gas prices, runaway grocery prices, runaway utility bills.
We really need to restore price stability, get inflation back down to 2%.
I expect the upward pressure in prices will continue for some time.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London, in for Francine Lacqua. Here's what's coming up on today's program. Unconditional commitment. Jay Powell again vows to beat inflation, while Fed Governor Michelle Bowman backs another 75 basis point hike. Stocks move higher and treasuries trim gains. And double defeat. UK Prime Minister Boris Johnson suffers heavy losses in 2 special elections as the chair of his party quits. Historic step, the European Union grants Ukraine candidate status while EU leaders devise strategies to weather Russia's gas supply cuts. Happy Friday. You made it to the end of the week. We're ending this week with some breaking data coming in on Germany's June IFO expectations, coming in much weaker than expected, coming in at 85.5. The estimate had been 87.4. Now, business confidence index, that also dropping more than expected as well at 92.3. 92.8 was the expectation. So that's not as big of a miss as the expectations there as well. Again, current assessment, 99.3. That actually beat the estimate of 99. So June IFO, I just want to make sure I say this right. I misspoke previously. June IFO Business Confidence Index, it was a miss, 92.3. The estimate was for 92.8. So again, a miss, not a massive miss, but again, this comes in the context of data disappointing throughout Europe. We had PMIs yesterday at a 16-month low. It's those recessionary signals filtering through the bond market. We are seeing some bond buying. You can see mostly up by about 3 bips in most of this market. So not as large as yesterday. However, it is clear that there's fear in this market. Germany, the German finance chancellor there, saying that he expects a Lehman-like moment if the gas crisis continues in the region. So there goes, some point moves higher on the indexes. Let's get a look at your overall market environment then. So those individual indices up, as is the main index. Europe Stock 600, that's up 0.8%. It follows on from a U.S. rally yesterday that is continuing in the futures index. It's this reevaluation of the inflationary story. As quick, nearly as quick as we put those inflation trades on, it looks like we're taking it off with the drop down in the commodities sector, with the do whatever it takes approach coming from the Fed. Are they going to be able to keep going, or is inflation going to come down, or is something going to break in this economy? Still, we are looking at two-year yields. Those are bid yet again. The yields there lower by 3.5 basis points. We're looking at a pretty sizable move down of about 20 basis points in the two-year yield so far this week. Some Fed rate hike repricing. It's happening globally as well, I should say. And again, a large part of that is the move down in metals. Copper, that's LME copper there, down more than 1.5%, down 20% from the high. So we're getting into this environment where we're pricing a recession in metals, in oil as well, despite a very tight market. Let's look at your overall European picture with the map. Again, it's mostly going to be green across the board, as we've been saying. It's not necessarily confidence in the economy that's driving us there. Instead, it is indeed this fear of a recession. But if rate hikes back off, if they're not as aggressive in terms of tightening, that's when we could see this rally filtering through and again picking up steam in the European session this morning. So to that macro story, the Fed Chair Jerome Powell once again promising to do all he can to curb runaway inflation during his second day testifying before Congress.
Inflation is happening everywhere now. More of our inflation is from demand, and we do have tools to deal with demand. Our tools they're blunt, but they are the right tools to deal with broad aggregate demand. We're very far from our inflation target. Our intent, of course, is to bring inflation down to 2%. Inflation getting back to 2%, get inflation back down to 2%. It's unconditional. Our commitment is that path has gotten more and more challenging thanks to the effects on oil prices and food prices. People do expect inflation to come back down to levels that are consistent with our price stability mandate. Without that, we're not going to be able to have a sustained period of maximum employment.
Meanwhile, Fed Governor Michelle Bowman adding to the hawkish chorus by backing a 75 basis point hike in July, as well as increases of at least 50 basis points in the next few meetings. Now let's get to some of the key market drivers. Our Markets Live reporter Simon White joins us in the studio now. Simon, thanks for joining. So, I mean, look, it does feel like this really big rethink in the markets. Is it a head fake, or is it sort of acknowledgement that the Fed is going to be able to get inflation under control?
I think it's a combination of things. I think the Fed has obviously been very hawkish right now, but in terms of how hawkish they ultimately need to be to truly get inflation back into a sort of low and stable regime, they're probably nowhere near. Like, very controversially, they probably need to be doing something like another 5 percentage points of tightening. Now, they're not going to do that, because right now the focus is on the cost of living crisis, so we're seeing some hawkish talk. But we'll move into the midterms. The political pressure will probably ease off in the Fed. By that point, leading indicators are telling you that growth is slowing, will slow more. Unemployment could well be rising by then.
Right.
And then I think we'll flip, and the pressure will be on the Fed to back off a little bit. They're talking kind of like tough right now. But once they're in that environment, I think it'll be a very different situation. And you'll find that they are talking about easing. But it'll be way too early because the inflation problem is still there.
I was going to say, is that kind of the environment that they want to get to in a way? They want to bring demand down in line where supply is, and supply is extremely tight. So isn't that kind of like the scenario that we're looking forward to?
This is exactly, they'll get to this, but on an interim timescale. So they'll be lulled into a kind of false sense of security. And now the 70s is an imperfect analogy, but the same kind of thing happened. You had way too easy settings. The Fed was hiking into the early 70s, but then we hit the recession. Political pressure then switched. They started to cut way too early. Inflation, it came off, but then it started to rise again. And the second half of the 70s was where it went crazy. You had the double-digit inflation, and it really laid the situation for the next Fed governor, Paul Volcker, to have the rate hikes that really solved inflation. But we're not there yet. We're going to have to go through these stages to get to that point.
Wait, so are you sort of in this camp, this idea that, okay, one of two outcomes, either the Fed backs off, they're not as aggressive, we don't get a recession, but inflation stays high, or they have to induce a recession. They need to continue to be aggressive, maybe 5%, in order to get inflation down. It's either or.
I think that they've probably got the mandate now for a shallow recession, but that's not going to be enough to get us back to the inflation regime of before. And I think that will lay the groundwork. We'll have to see some sort of serious damage done before you can have someone that's probably not Powell. He's probably fighting the last war.
Right.
And someone else that can come along and really do what it's going to take. Now, it's not definitely going to happen like that, but as much as the 70s is an imperfect analogy, some things don't change. The behavioral aspects don't change. Monetary policy becomes more interfered by political interference. We're seeing that today as it happened in the 70s. So I think there's more similarities than differences, and we could end up in a very similar situation.
And part of sort of what helped add fuel to this fire in terms of a global rally into bonds, that haven asset, was yesterday these really weak euro area PMI numbers. And of course, the ECB has an even more difficult task given that inflation, energy inflation, is hitting them so hard, and the economy is already starting to show that signs of weakness. How much does that bleed into the global asset picture, this fear emanating from Europe?
Yeah, I think it's going to be problematic. I mean, we're already seeing it obviously ripple across all markets. I think now, unfortunately, like, markets are very kind of unhinged, if you like. They're much more responding to price. So levels are really important when it comes to markets. Technicals are very important right now. But the underlying picture is, of course, rates have moved higher. They're having an impact across the economy. And that will continue to happen. What I think will be interesting to note is the next potential shoe to drop, which hasn't really been come into the data, is the earnings. Earnings are still relatively elevated. They don't look like they've caught up. But every leading indicator you look at, whether it's like the fall in unemployment or the rise in, the fall in CEO confidence and sentiment, they all point to much weaker earnings.
And perhaps that's the reason why equities are rallying. I mean, I know they're rallying because the Fed expectations are coming off, but despite recession, I really like, we have a viewer writing in that I want to ask you their question, because I think it's really smart in this environment. Where's that inflection point where bad news will be bad news once again? Because if how we're trading in this market today is bad news of a recession, I mean, the stock market doesn't seem too bothered.
Yeah. It's that getting that inflection point is very difficult. I think we're going to continue in this environment for a while. I mean, look, the stock market generally goes up, and it always looks for reasons for going up. I think we could see the rally extend for the next, at least the next few weeks. But there's a significant number of headwinds that suggest that the actual proper low, the tradable low, is not yet. Normally you see signs of capitulation, and we haven't really seen signs of outright panic. We've seen a lot of negativity, but we haven't seen the signs of outright panic.
Right, Simon, thank you so much. That's our MLive Simon White breaking all things markets down for us. Now, coming up, IFO Institute President Clemens Fuest on the German economy after IFO, I should say. Business climate expectations and confidence came in below expectations. That is next. We also have some pictures for you coming from Brussels at the EU summit. Scholz is speaking there, talking about the need to accelerate efforts to diversify away from German gas, saying that they're well prepared for Russian fossil fuel import issues. We'll bring you the latest from the meeting throughout the morning. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Now, German business confidence unexpectedly deteriorated in June. The IFO expectations index declined to 85.8. That's below the estimates of 87.4. Now, this is all happening as Europe's largest economy grapples with energy supply issues, rampant inflation, and component shortages. For more, we're joined by Clemens Fuss, president of the IFO Institute. So, Clemens, we have some numbers coming in here, some negative readings when it comes, especially, as you say, to the energy-intensive industries. Last month, you said there were no observable signs of a recession. Given these most latest figures, has that changed in your mind?
I think the likelihood of a recession is clearly increasing. There is a lot of pessimism about the gas situation. A month ago, the risk seemed smaller that Russia will cut off gas supplies. Now, gas supplies have been reduced. Nobody knows whether that's permanent or whether that will go down to zero, but the risk is rising, and that's why the energy-intensive sectors are worried. Energy prices are rising, and that also has an impact on the rest of the economy. For instance, in retail, companies seem to fear that as consumers spend more on gas, on heating, they will spend less on clothing and other things they buy. So the overall picture is rather gloomy.
Rather gloomy, so the odds of a recession are increasing, but are they beyond likely? Is it beyond 50%? How prepared do you think we need to be for that level of downturn?
Well, I think we need to see the timing. I think there are a few dangers of a recession this year because the gas shortage will have a strong impact in the winter. Now we are out of the heating season, so we're still okay. But if Russia does reduce gas supplies further, what our forecasts say is we will get a recession, but in 2023. Not before that. There's also some support for the economy coming from the sectors affected by the corona pandemic, like hotels, restaurants. So I think for this year, we are safe, but depending on gas supplies, there may be a recession next year, and the likelihood currently certainly rises.
Well, Economy Minister Habeck yesterday said that after he raised, we're looking at a full screen of this now, raising the gas plan to stage 2 of alarm, that the risk of a collapse in the energy sector is there should the flow get disrupted more. He called it on a Lehman-like level. Is the risk that acute? Do you foresee a Lehman-like event in terms of the energy complex?
This warning is strong, but I think to some extent justified, because we need to see that if energy prices rise very strongly, one issue is, can the energy companies pass this on to the consumers? So the government has legislation that would allow that. But we need to be prepared. If the gas prices are passed on to the consumers, this will have a very strong impact on them, and that is a risk. But if we don't do anything, it may very well be that some energy companies collapse because their costs are rising and their revenues aren't. So it's a serious situation. We need to prepare for that, meaning we need to make sure that there are gas savings now, and that in turn does require higher prices for consumers, for manufacturing, so that they get the right market signals and reduce their prices.
You've started to see that concern ripple through businesses, be it in your latest IFO survey, be it just in some of the action of corporates, BASF cutting their production, BMW looking to buy electricity from third-party services instead of their own gas-powered plants. Concerns of a pullback in investment, is there that concern, and could it lead to long-term scarring in the German economy?
Yes, I think there is the risk, mainly because we have this very high uncertainty about what's going on, about in particular the gas supply situation. And the rising uncertainty means that doing nothing, waiting, stopping investment projects and waiting to see how these things develop gets more valuable. So that's what companies will do. They will reduce their investments and wait how this continues. So as I said, this may add to the risks of a recession next year. I don't think it's going to have a very strong impact now, because investment is held back anyway by bottlenecks. Well,
Clemens, does that mean we're not at the point, or are we at the point where we should start to see gas rationing taking place? Are we there yet?
I don't think we are there yet, and we might not get gas rationing at all, but an auctioning system which is being prepared, and that means if companies are ready to pay very, very high prices, they will probably not be rationed. But in terms of economic impact, it's very similar to rationing, because if it's if gas costs are too high, some companies will just be forced out of the market.
All right, Clemens, thanks so much for joining us this morning. Clemens Fuss, president of the EFO Institute, speaking to us after the latest survey results coming out. Now let's get to the Bloomberg First Word News. With that is Alice Atkins. Alice.
Hi, Danny. Boris Johnson has suffered a major election upset, losing a formerly safe UK Parliament seat in southwest England. The Liberal Democrats overturned a 24,000 Conservative Party majority to take the rural constituency of Tiverton and Honiton. In a separate election, Johnson's party was beaten by Labour, raising fresh questions about the Prime Minister's popularity. The Conservative Party chairman also quit after the result, saying we cannot carry on with business as usual. The US Senate has passed a bipartisan gun safety bill, legislation hailed as the biggest breakthrough on the issue in decades. It aims to improve background checks, secure schools, and fund states to combat gun violence. The bill now goes to the House of Representatives. Just hours earlier, the US Supreme Court struck down a New York law limiting public handgun carry laws, a ruling that could mean more guns on the streets of big cities. Global News, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny?
Alice, thanks so much. Alice Atkins there. Now, coming up, we're in Brussels for day 2 of what has been a historic EU summit. Ukraine, Moldova, formally placed on the path to union membership. Topping today's agenda, energy security. We'll have more on that next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, it's the second day of a historic summit of EU leaders in Brussels. Yesterday, both Ukraine and Moldova were granted candidacy status for membership of the Union. Now, Georgia, at the same time, was told it could win the same status if it met certain conditions.
All three countries are part of our European family. We've never let any doubt about that. And today's historic decision by leaders confirms that. It grants all three the perspective of EU accession, and it lays down the path ahead. I think this is a moment of great satisfaction, and I'm very pleased with the leaders' endorsement of our opinions. There can be no better sign of hope for the citizens of Ukraine, Moldova, and Georgia in these troubled times.
Let's get more with Bloomberg's Europe correspondent Maria Tadeo in Brussels. So we've just seen leaders arriving at the summit moments before. Certainly a lot of challenges remain, particularly on the economic front. Maria, how do they work through this?
Yeah, and Danny, you know, yesterday you could argue was a celebration, that historic moment that the head of the Commission, Ursula von der Leyen, alluded to there, but today really is a sobering up as a result of the economy. And Danny, just picture the scene. We know that the European Central Bank, of course, is going to take rates higher. Inflation continues to be a problem. Yesterday we had that incredible language, like really, we should really highlight the language coming out of Germany and the German economy minister, Mr. Habeck, where he says we're facing potentially a gas crisis. This could be a Lehman moment. And today, a lot of concern now, and a lot of officials don't want to say this on the record just yet, but behind the scenes, a lot of concern about Russia unilaterally at one point, as a result of politics, cutting off gas flows. And the reality is that we're still at a stage in which Europe is trying to bring up the storage, but of course that is still a challenge. They have the entire summer to prep for this, but they worry about the shape of the storage come September. And then of course you have the winter and the most vulnerable time of the year for European economies when it comes to that dependency on gas. So Danny, there is a lot of challenges here. It does seem like this is almost a perfect storm that's brewing for Europe, and for the time being, not a plan B that comes out of this meeting.
Maria, thank you so much. Bloomberg's Maria Tadeo there. Now coming up, British Prime Minister Boris Johnson suffers heavy losses in 2 special elections. We're going to talk UK politics with Sir Vince Cable next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Unconditional commitment. Jay Powell again vows to beat inflation, while Fed Governor Michelle Bowman backs another 75 basis point hike. Stocks and treasuries move higher. Historic step, the European Union grants Ukraine candidate status while EU leaders devise strategies to weather Russia's gas supply cuts. German business confidence declines as the nation faces energy constraints. And double defeat, UK Prime Minister Boris Johnson suffers heavy losses in 2 special elections as the chair of his party quits. We'll speak shortly with former Lib Dem leader Sir Vince Cable. Good morning, happy Friday, and welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London. Well, let's stick with that UK story with Boris Johnson suffering 2 defeats in special elections. The results raise questions surrounding the Prime Minister's election-winning potential. Oliver Dowden has resigned as the party's chairman, saying this morning, we cannot carry on with business as usual. For more, we're joined from Westminster by Bloomberg's Laura Wright. All right, Laura, how bad is this for Boris Johnson?
It's been a terrible night for the Prime Minister, Boris Johnson. Voters expressing their discontent with the government at the ballot box. It's why the resignation of Conservative Party Chairman Oliver Dowden is being viewed as a distraction from the real problem that is Boris Johnson. If we break down the details, Wakefield and Yorkshire returned to Labour with a 12% swing. It was one of the red wall seats, if you remember, that the Conservatives claimed back in 2019 with a Get Brexit Done mandate. In Tiverton and Hoverton, Devon, that result in particular is being seen as a political landslide. It's been a Conservative seat all the way back since 1920, and the Lib Dems have overturned a 24,000 Conservative majority, the largest Conservative majority to be overturned in by-election history. These losses, Danny, fueling rumours that Conservative MPs are vying to organise another vote of no confidence in the Prime Minister ahead of the usual 12-month gap from the last, which took place in early June.
Laura, we had some data also out early this morning on UK consumer confidence. There's concerns about the cost of living crisis. How is that impacting the political landscape?
UK citizens' incomes are being squeezed, and as you mentioned, UK consumer confidence data out overnight reached a record low, -41. To put that in context, -30 is typically a bearish recession indicator. UK inflation earlier this week at a 40-year high. Real wages are falling, purchasing power is being diminished, the economy is grinding to a halt. And interestingly, a recent poll from YouGov shows that if a general election were to be held today, the opposition Labour Party would have a 6 percentage point lead. But don't underestimate the Prime Minister, Boris Johnson, Danny. They say he makes a cat with 9 lives look mortal.
All right, Laura, thank you very much. Laura right there outside of Westminster. Let's dig into this more. We're joined by Sir Vince Cable, former leader of the UK's Liberal Democrat Party and former Secretary of State for Business. Thanks so much for joining this morning. We have to start with this remarkable and historic set of results in Tiverton and Huntington. So you have your party win, a swing of 30%. Is this something that can be replicated elsewhere in the country?
Well, it's already happened twice before. This is the third in succession of spectacular by-election wins in areas where the Conservatives and the Lib Dems are the 2 parties in contention. So there is already a pattern. And it's partly deep unpopularity of the government, partly the Dems have a good record in local campaigning, but also, and highly significant, the fact that Labour voters are voting tactically for Liberal Democrats where they think we have a chance of winning. And that is something that could well carry through to a general election.
I mean, just how extreme you say, okay, it's already happened before, this is just another instance. How many other Tory seats are you eyeing?
Well, there's a list of, I think, 40 target seats. That may be ambitious, but indeed after yesterday, maybe not all that ambitious. But certainly in the suburbs of the big cities, not just in the south, but Manchester, Stockport, in the southwest of England, where the Liberal Democrats have traditionally been strong. Yeah, there are different parts of the country where we could well break back to the position of strength that we had a decade or more ago.
So I know you've said previously that perhaps the Tories losing these seats were a bit baked into the price. But does the extensive loss, does it tell us anything about Boris Johnson's appeal? Has he lost that ballot box appeal?
He has, but you know, he's a skillful politician, and David Cameron's description of him as the greased piglet probably is fitting. I mean, he does get out of scrapes. I'm not sure. I think the Tories are beginning to panic. You know, this idea of changing their rules so they can have a fresh leadership election.
Do you think they'll do that?
Well, they're talking about it. I mean, the problem they have is that, quite apart from Boris Johnson's personal failings, which were clearly a major part in the results yesterday, is that the economy is deteriorating, and there's no obvious end in sight. You know, we haven't yet begun to see the impact of the likely slide in sterling, which is almost certainly going to happen over the next few months. There's the Russian gas squeeze that happened last week that is going to feed through into even higher fuel prices than we had expected. We've got the impact of, you know, Britain being the weakest of the G7 countries in terms of growth, expecting this higher interest rate recession. I mean, all this is terrible news if you're an incumbent government, and whether they stick with Boris Johnson or get somebody new, they're going to face this tsunami coming towards them in the latter part of this year and beginning of next year.
Well, you've written about before, spoken about before, this idea of needing to have a sacrificial lamb. I know you've spoken about this in the context of Rishi Sunak. We had Oliver Dowden resigning after these results is enough. Do those things go far enough if it is this tsunami that hits the UK economy?
Well, the Oliver Dowden resignation is not particularly significant. I mean, I don't think there'll be a great deal of sorrow for him. I mean, he was somebody who threw in his lot with the Johnson people, though he was initially a kind of reforming Cameroon. He changed sides, and he's paid the price for it. But I think the important question they will have to face is, could anybody do any better?
Could they?
And the awkwardness I think they have is that they have some people, you know, Jeremy Hunt is a good example, who might have broader popular appeal, but they're not popular with the party
Well, you talk about this tsunami coming, and I do think this is an interesting question. What actually can be done? Because it's a global crisis we're facing, right? It's not just the UK. There's specific idiosyncratic issues here. But what can be done to soften the blow from these economic pressures?
Well, governments can't stop it because, as you quite rightly say, it's a global crisis. But I think a mixture of short-term palliatives, I mean, the idea that David was talking about, of a general cut in value-added tax, which is disinflationary. If you're going to use the tax mechanism, a good way to do it. I think more to ensure that the really vulnerable people are not sucked into the kind of World Bank, the food bank situation, low-paid workers. A lot more could be done on the kind of universal credit improvement. And then I think the real problem with the British economy, and one of the reasons why we're in a worse position than many European countries or the States, is the complete collapse of business confidence. You know, we just
had those numbers roughly low.
And, you know, business investment is dire. It's been dire since the Brexit vote. It's getting worse, and business has no sense. You know, a government that's moving from day to day has no kind of long-term perspective. You know, we had, when I was in government, and indeed under the Tories afterwards, an industrial strategy. We had a kind of 5-year view looking ahead, and that kind of perspective is totally lacking, and it needs to come back.
Again, though, you know, I have to go back to this idea that so much of it is about the energy crisis we're facing. It's about the war in Ukraine. I know we're talking about this in sort of the political context, but just how concerned are you about the UK economy in terms of a recession? Do you think that this is going to come soon, assuming we stay on this path? What are your predictions?
Well, there is a general problem affecting all major developed countries and developing countries even worse. True. But I think the UK, we're particularly vulnerable because of the way inflation is relatively high, growth is relatively poor, and I think even people who are not partisan, as I am, are predicting that we're going to get into a recession later this year, beginning of next year, and unfortunately with worse to come. I mean, this is the awkwardness. One of the possibilities that people do need to think about, I mean, I'm not predicting this, is that the Tories might actually risk an early general election because they know so much trouble is coming, and if you got a new leader, it would be an obvious thing to do.
Isn't that really risky at this moment?
It's
though?
highly risky, but it's
very low.
it's the kind of thing Johnson might do. He's a risk taker, he's a gambler. And if they got a new leader who might try to replicate what John Major did, 1991-92, fresh face, looking for a new mandate, and the Labour Party did well in Wakefield, you know, a good result, sure. But it wasn't spectacular. It's not the kind of swing that you would expect as sort of Tony Blair enjoyed back in 1997. So if I were doing a bit of forward thinking, I would factor in the possibility that however implausible it seems this morning, the Tories might see advantage in a quick run to the electorate in the autumn.
I know you say you don't want to make predictions, but I have to say, you said around in May time that we might see a fight picked with the EU over the Northern Ireland Protocol, and about a month later that did indeed happen. And you said this sort of in the context of the minister trying to shore up his authority. So that's already happened. Do you expect more to take place in terms of Brexit as Johnson faces these issues?
Well, his style is very much to look for these wars, conflicts, which gives some short-term advantage. It's not obviously working for them, but they're very strongly tempted to do it. Brexit is one of the few things that unites this government, as we discovered yesterday with the analysis in the economy. It's almost certainly not been good for the UK. It's a slow puncture that's doing long-term damage, but nonetheless, politically, for Johnson, it's his one achievement with his own supporters. And so they're going to look for little fights. The danger, of course, is that it isn't just creating division in the UK, but it's antagonizing our American friends who Biden hates all this stuff, doesn't want conflict with Ireland. So the government, I think, has been rather foolish to do it, but they may feel they're getting some short-term traction with their own supporters.
Okay, Vince, I'm afraid we're going to have to leave it there, out of time. Sir Vince Cable, former leader of the UK Liberal Democrat Party and former Secretary of State for Business, thanks so much for joining us. Now, coming up, venture capital's diversity problem. We're going to be joined by Rick Lewis, chair of Impact X and owner of Britain's largest black-run business, to discuss underrepresented founders. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal
honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the House for business's greatest minds.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Let's get to your Bloomberg Business Flash. With that is Alice Adkins. Hi, Alice.
Hi, Danny. Wall Street's biggest banks are set to return tens of billions of dollars to investors after passing the Fed's annual stress tests. The bank showed they had enough capital to handle a cocktail of surging unemployment, collapsing real estate prices, and a plunge in stocks. More than 30 lenders were tested by the U.S. Central Bank. Bloomberg has learned that Deutsche Bank's board has agreed to take a pay cut after criticism over the widespread use of private communication channels like WhatsApp among staff. The lender is among several firms under investigation by U.S. authorities over the use of private messaging that can't be archived. Top execs at the bank are set to see a €75,000 cut to bonuses. Netflix has laid off another 300 employees as the streaming giant seeks to bring costs under control amid uneven subscriber growth. The job losses, which represent around 3% of the workforce, will mostly affect workers based in the US. The company is retooling operations after losing 200,000 subscribers during the first quarter. Bloomberg has learned that Tesla is taking steps to ramp up output at its factory in Shanghai. The electric vehicle maker will partly suspend manufacturing until early August so it can upgrade production lines. Bloomberg sources say the move will push Tesla's output in China to more than 1 million cars a year from the previous capacity of 450,000. And that's your Bloomberg Business Flash. Danny?
Alice, thanks so much. Now, let's get to one of our top stories today and the equality story. Rick Lewis is the owner of Britain's largest black-run business, Tristan Capital Partners. It's a London-headquartered real estate investment management boutique. Now, his charity Each Day, Every Day helps with disadvantaged students with their higher education costs and is supported by the British rapper Stormzy. Now, Rick also chairs Impact X, a venture capital fund that supports underrepresented founders. And Rick joins us now. Rick, good morning to you. Thank you so much for taking the time this morning. I want to start there on Impact X. Look, it's a conversation we frequently have that minorities, underrepresented populations struggle to get funding. But of course, you're on the ground, you're looking at the day-to-day lives of this. Just how bad is the problem? Has it improved at all since you've been working with Impact X?
No, sadly it hasn't, Danny. I mean, we thought sort of after George Floyd and the Black Lives Matter movement that it was going to improve, but like if you look at the numbers, they're horrible. A quarter of 1% of all VC funding has gone to black entrepreneurs, and 0.2% has gone to black female entrepreneurs. That's after the upswing in sort of social conscience that we were going to change this balance, and the initiative on the part of so many organizations to put themselves out there to attract this funding. Really well qualified teams looking for capital are still not getting it. And I'm at the coalface of it, so I can tell you that the numbers look bad.
There does seem to be, in the wider VC space, Rick, this reckoning that's happening. Folks paid up a lot, valuations were elevated, and now some of that is starting to come down. What does that mean in trying to get funding for underrepresented founders in this current, again, rethink of the VC space?
Yeah, I don't want to be pessimistic, but it's not good news. As values are coming down and marks are coming down, there's going to be a smaller pie, and then people are going to be forced to make harder decisions about what they want to back, which funds and initiatives that they want to put capital into. And that means the already bad or difficult decision that they're not putting capital into underrepresented, underchosen founders is going to become an even tougher choice.
Let's extrapolate that to the wider economy. You, of course, also have Each Day, Every Day. We spoke about that in introing you, disadvantaged students, helping them with higher education costs. What about the wider economy, the downturn facing there in terms of minority populations?
Yeah, as the challenges to the UK economy increase, the cost of living increases, amplifying inequality among our population. The hard facts are that it's not a level playing field when it comes to economic opportunity and economic employment and quality of opportunity. Unemployment rates are consistently higher among Black and minority populations, and wage rates are lower. That disparity looks to get worse, unfortunately. What we're trying to do is that we believe that education is one of the most potent and productive pathways to demonstrable social change, equality, and greater productivity among our population. And our foundation, the Black Card Foundation, has been providing both capital and resources, coaching and mentoring to young students in underrepresented populations through our Black Card Scholars Program. Since 2013, we've endowed over 500 scholars at 125 colleges, universities, and programs across the UK. But what I can tell you is the need's getting even greater. Our applications doubled in the last 12 months and probably 4 to 5 times higher in the last 3 years.
I have to say, you do see some asset managers, some private funds, well, many of them acknowledging the issue in terms of inequality in the world. A lot of them, hire an impact chair, they start an impact fund. I wonder how real and how effective these types of efforts are, Rick. I mean, are we going to have a situation where, the greenwashing debate that's happening right now, we sort of refocus that and perhaps say, look, there's also diversity washing going on?
I want to be polite but direct. The truth is that the pendulum did swing in a positive way to people thinking about these issues and trying to take the first steps of coalescing some of their organization to address them. But the truth is the capital, the movement, the impact hasn't happened. It's starting to happen. And now, as there are bigger exogenous events, the economy is starting to weaken. There's a bunch of reasons and rationale to forget about those initiatives and stop doing them. I can just tell you that the need isn't getting smaller, it's growing.
All right, well, Rick, we can't have you on without talking about real estate. Of course, that's what you do at Tristan Capital Partners. We're talking about sort of this concern about the economy, this doom and gloom. Take me to what that means for UK real estate. When you did have a weaker sterling, you had, outside money coming in, international buyers, you had pay rises coming in through the finance sector. So you did have this positive environment. What happens now that, again, we're looking at this economy that looks like it's on the precipice of turning or perhaps is already there?
Yeah, we did have some really positive traction, and there are still elements of that in the economy. There was a great way to capital moving into alternatives and moving into real estate into our space. We had started to return to work and return to economic activity. We could see that across our entire portfolio. So things were starting to be optimistic. But with the economy starting to change, interest rates going up, you can start to feel the beginning of a pause. Certain trades in sort of our space are slowing down. Some would say that if you're organizations like us that have conviction and capital and been around a long time and have a great network across the marketplace, that will be an opportunity, but there's certainly a little bit of rough patch before we get to the opportunity, and we're in the middle of that right now.
Rick, just quickly, has the sort of return to office narrative, has that normalized yet?
Yeah, I think it has. I mean, I think that there was a great concern that we weren't going to need any of the office space, out there in the world, and that just hasn't been true. What we've seen is office rates for the best qualified sort of non-obsolete offices going up. So occupancy's gone up, and lease rates have gone up. The weakening in the economy will dent that a little bit, most certainly. But the story that the death of office was imminent was overplayed and has turned out to be untrue.
Rick, really great to catch up with you this morning. That's Rick Lewis, chairman of Tristan Capital Partners and Impact X. Now, coming up, we're going to dive back into the market story. Jay Powell vowing to beat inflation. Fed Governor Michelle Bowman backs another 75 basis point hike. Bonds, yields, those continue to drop as equities rally. More on that next. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now let's get a quick look at the markets as we close out the hour. European stocks continue to rally. Again, it's this rethink of the inflationary story. You've had metals, you've had oil, all of them coming in. I should say, see at the bottom of your screen there, oil is moving slightly higher. However, it did fall more than 11% in 5 days at one point. So again, if commodities are turning, is it a sign that the inflation fight coming from the Fed is finally starting to take hold? It's not unreasonable then we see a rethink in rate pricing. This is across the world. You're looking at two-year yields, be it Australia, Canada, US, UK, Germany, all of them collapsing this week. A move into not just yield, not just bonds, I should say, but really haven assets in general as we have this recession discussion. However, is it what the Fed wants to see again to get inflation into check? Aussie bonds, those falling more than 40 basis points over the week. Two-year yields in the U.S., those down more than 20 basis points. Well, Bloomberg Surveillance Early Edition will continue in the next hour. Matt Miller, Kaylee Lyons, and Anna Edwards have that for you. This is Bloomberg.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan, bisa sampai 2 juta dulu. sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It's unconditional. Our commitment is that we really need to restore price stability, get inflation back down to 2%.
I think there's a notion of a wage price spiral here.
We need to make sure that we have enough oil and gas in the economy now over the next several years to meet the demand that we have in the economy.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, June 24th. Our top stories today. Moving in different directions on guns, the U.S. Senate passes a bipartisan gun safety bill by a wide margin. That happened hours after the Supreme Court issued a landmark ruling that could lead to more firearms in the streets of big cities. A warning for investors from SocGen. If the past 150 years of financial market history are any guide, the S&P 500 may have another 24% to fall by the end of the year. And a major election upset for Boris Johnson. His Conservative Party suffers a double blow in regional by-elections. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. The conversation in here in London, Kaylee, then sidetracked, distracted a little by the politics. But from the market's perspective, bad news seems to be treated as good news right now as everyone tries to second guess the Fed once again.
Yeah, at what point is the Fed actually going to have to pivot back toward easier policy if they're too aggressive on the tightening and we see a slowdown in growth as a result? You're trying to see the bond market price that in, which is why we've seen yields coming in really across the world, and that has given a lift to equities. At least that was the case in Asia overnight, where the MSCI Asia Pacific Index was up about 1 percentage point. But really the move was led by Chinese technology stocks, again, sensitive to the rate story. The Hang Seng Tech Index was up about 4%. As for that rate story, we see yields coming in again around the world, but it has been really dramatic in Australia this week. I'm talking double-digit basis point moves basically every single day. Today, the 5-year yield down 14.5 basis points, back down to 342. Finally, I would just note that the dollar is weaker against the yen, or the yen stronger against the dollar, for a third day in a row. It is a small move, but really reflective of that haven bid, lifting the yen off of its weakest level since 1998. Right now, dollar yen trading just south of 135, Matt.
All right, so coming back in a little bit, I'm looking at futures that are rising again. Well, I should say rising after a gain in the cash trade yesterday. Right now, up 2/3 of 1% in futures. The cash trade, we were up almost 1% on the S&P. It was mostly defensive stocks that rose yesterday, but some tech names, Amazon, Apple, Microsoft, really leading the gains. And tech is what's leading the gains today around the world as well. U.S. 10-year yield coming down as investors buy that debt. Right now, 3.08. And I keep saying this, but, you know, just a couple of weeks ago, we were up at 350. So we've come in more than 40 basis points over the past couple of weeks. We've come down about $20 over the past week and a half on oil. We're up today right now, 75 cents to 105.02. But just last Tuesday, we touched 124. in intraday trading. So really interesting moves there in commodities. And then Bitcoin, of course, up right now with futures right now at 21,058 from midnight. So gaining in correlation with other risk assets. Anna, what do you see in terms of European markets?
Yeah, European equity markets then playing a little bit of catch up with the US, but also looking ahead to the US trading session, no doubt, and seeing some positivity. So we're up by more than 1.4% on the French market in particular. The DAX also up by 0.6%. So a bit of positivity, maybe that retrenchment in yields that we've all been talking about, maybe that giving a little bit of room at the margin for stocks to go a little bit higher from here. Let's have a look at what else is on the move on European markets this morning. And we've got the bond markets in focus. We've mentioned what's been going on with yields. We have seen some appetite for bonds of late, things turning around perhaps a little bit at the short end of the 2-year curve here in France. We see some bond selling happening there and those yields going a little bit higher. This is the natural gas price down by 1.5%. This is the European benchmark. And even the IFO Institute acknowledging we could see a recession in Germany. A lot of talk about where the German story goes next, how they managed to secure supplies of gas, and whether we will see a restart in the pipeline that's going to be taken offline during July, whether it will be restarted afterwards. That's something that the German establishment coming to terms with. What would happen if that pipe were not restarted after maintenance in July? This is the pound, 122.74 against the US dollar, so up 0.1%. Losing earlier gains though, Kaylee. We saw retail sales numbers coming in and some revisions to last month that weighed on sentiment. We saw the consumer sentiment picture looking the worst that it's ever been. And so as a result, a little bit of weakness came through in the pound, or at least it lost some of its earlier gains. The politics also in play for the moment on the sidelines when it comes to the pound. Zalando is down by 12.9%. This is a retailer in Germany, an online retailer. It's taking other online retailers and fast fashion names down with it today. A profit warning came through, Kaylee, from Zalando, and some analysts in this sector warning that expectations for this sector in an environment where consumers are squeezed are too high, and so we should expect to see further downgrades coming through, Kaylee.
Yeah, it raises the question of whether expectations are too high broadly, because given all the pain we have seen in equities, you haven't seen analyst earnings estimates coming down to the same extent. There's a little bit of a gap there. Now let's take a look at what is ahead today. It's Friday, but we still have a ways to go until the end of the week. It is the second day of a historic summit of EU leaders in Brussels. We'll be live from there in just a moment. Plus, we'll be getting more Fed speak and hear from Fed Governors Jim Bullard of St. Louis and Mary Daly of San Francisco. And finally, the big economic data point to watch today, 10 a.m., we get the final print of June's UMich Sentiment Index. How much will the surge at the pump weigh on consumer sentiment, Matt? And what do those inflation expectations look like? Because we know the Fed is paying close attention to those.
Consumer sentiment, as measured by the University of Michigan, is already at an all-time low. Now, let's talk about what's going on in Washington. It's being called the biggest breakthrough in U.S. gun safety in 3 decades. The Senate voted to approve bipartisan legislation that will beef up background checks, secure schools, and give states money to fight gun violence. Emily Wilkins, Bloomberg government reporter, joins from D.C. for more. Emily?
So yes, we saw this bill pass the Senate last night with a pretty good-sized margin. You saw 15 Republicans join Democrats in this vote. The bill is now going to be voted on in the House today. That's expected either this morning or early afternoon. We're not expecting to see as much bipartisanship there. We know that Republican leaders in the House will be whipping against the bill, certainly a change from what we saw in the Senate with Mitch McConnell backing it. But that bill is still expected to pass and to make it to President Biden's desk. And yes, this is a bill, if you look at the last 30 years, this bill is being hailed as one of the biggest when it comes to gun control measures. But you also have Democrats caveating it with it's still not enough. They want to be able to do more. You heard from Senate Majority Leader Chuck Schumer, who said that the reason that Democrats are behind this bill is because they could surrender to gridlock, or they could choose to try and forge a bipartisan path forward.
Well, and Emily, what a day for this bill to be voted on, because it was passed in the Senate just hours after the Supreme Court struck down a New York law that limits public handgun carrying ability. We heard from New York City Mayor Eric Adams speaking about this yesterday. Just take a listen to what he had to say.
The opinion claims to be based on nation historical past, but does not account for the reality of today. It ignores the present, and it endangers our future.
So, Emily, obviously this was a very high-profile ruling from the court, and it comes as we're also awaiting a ruling from the court on abortion that actually could send the power back to the states, where the court said in this case the states can't have the power to choose on their own. There is a federal constitutional right here. What is the feeling in Washington this morning about the high court?
I mean, there's certainly a question about what's going to be coming next. I mean, I think to a certain extent, a lot of people are expecting to see more restrictions on abortions with the Roe ruling. I think there was also not a huge surprise in D.C., given the conservative makeup of the court, that the ruling came down this way on gun laws yesterday. I think the question is now, where do we go from here? And you saw Mayor Eric Adams allude to it a little bit, and you also saw it in some of the opinions that justices wrote, that now there are questions about exactly how far states and localities can go on concealed carry laws. You saw Justice Kavanaugh, Justice Roberts note in their opinion that it's possible for states to limit who has concealed carry. It simply needs to be the same standard for everyone across the board. And Justice Stephen Breyer also mentioned in his opinion that you also need to look at how cities should regulate areas where people gather in large numbers, like movie theaters, concerts, some of these areas where we have seen mass shootings. So I wouldn't expect this to be the last that we've heard on this particular debate on concealed carry, but this is certainly breaking new ground, with the Supreme Court weighing in for the first time on carrying outside the home, which has been an area that they've been really reluctant to touch in previous decades, but you are seeing this new, more conservative court go ahead and take on some of these issues.
Emily, thanks very much. Emily Wilkins of Bloomberg Government with an important update there from Washington. Back to the markets, the S&P 500 index may have another 24% of fall by year-end. That's according to SocGen, based on the past 150 years of financial market history, they say. Bloomberg's Danny Berger has been poring over the details. Danny.
Yeah, Anna, this comes from the quant team, and you know I love me some quants. It's an interesting argument and thesis to hear, especially today on a day when stocks are rallying, perhaps due to the concern about the economy and what that means for the Fed. But basically, looking at this wide set of data, they argue that from the peaks, the fair valuation of when we enter into a crisis period and come out of it is far lower than where we are now. Indeed, they say that from the January peak, we needed to fall about 40%. In percentage point terms, we're about halfway there. So it's not necessarily about valuations of this market. It's based on past crises valuations as well. And look, part of the conversation is perhaps we haven't fully capitulated, and that's why we're not as low as where SocGen thinks we will be. Perhaps we'll get there. There are signs of pessimism. For example, Bank of America says that through Wednesday, there were outflows from equity funds the most in 9 weeks. So there certainly are concerns there. But again, that came before markets started to rebound. So how much further do they need to go to fit, in the opinion of SocGen, that sort of post-crisis valuation?
Well, Danny, you mentioned signs of pessimism. The bond market clearly reflecting pessimism on the growth story, and that we've seen yields coming lower, including at the short end, even though in theory that should rise even further due to expectations of Federal Reserve hiking. We heard from Bill Ackman overnight saying that the bond market is misreading the Federal Reserve.
Yeah, 2-year yields coming in 20 basis points this week. It certainly feels like this really momentous about face. But yes, Bill Ackman saying, I think the bond market is misreading the Fed. This is likely due to Powell's communication style and some wishful thinking on the part of investors. Inflation is out of control and inflationary expectations have become unanchored. So his argument, not necessarily that we're just overly pessimistic, but it's about Powell, that perhaps the bond market always interprets him as dovish whenever he goes off script. And that's why we've seen this change in pricing. I don't know. I mean, who am I to disagree with Bill Ackman? But it does feel like it's more inflation expectations versus reading Powell wrong. For example, break-evens, those have started to come in as we've had this decimation in the prices of commodities. So the market is sort of turning on that, not necessarily thinking that Powell's going to back out, but more perhaps that Powell is doing what he wants to do to slow down the economy to bring inflation in line. But Bill Ackman does say, look, just because we're talking of a recession doesn't mean that inflation is going to come in.
Well, and he makes a good point about even Kashkari backing 75 in July, and then other Fed governors coming out and supporting him. So maybe the market needs to get its expectations aligned with the Fed governors. Danny, thanks so much for joining us. Bloomberg's Danny Berger there out of London. Now, it's the second day of an historic summit of EU leaders in Brussels. Yesterday, both Ukraine and Moldova were granted candidate status for membership of the European Union. Georgia, meanwhile, was told it could win the same status if it meets certain conditions. Ursula von der Leyen, the European Commission president, spoke yesterday.
Of course, the countries all have to do homework before moving to the next stage of the accession process. But I am convinced that they will all move as swiftly as possible and work as hard as possible to implement the necessary reforms.
Maria Tadeo, Bloomberg European correspondent, joins us now from Brussels. So, Maria, leaders face challenging issues today on energy, on the economy. What can we expect?
Well, Matt, we did have a historic breakthrough. Like the head of the commission, of course, alluded to there that candidacy status for Ukraine. Remember, that had been the centerpiece of the Ukrainian foreign policy for years. They had campaigned for the status candidacy happening yesterday, of course, endorsed by all of the European leaders. We should remind everyone, however, that being a candidate and a full member of the European Union is not the same thing, and the transition at times can take years. That's for the politics. But today, Matt, a lot of sobering up when it comes to the economy. And picture this. Of course, we know the European Central Bank is going to hike rates, but it's not clear that is going to deal and bring down inflation. A lot of this driven by energy. And then yesterday, the comments from the German economy minister, Mr. Habeck, incredible language. He says Germany's facing now a gas crisis potentially, and that could be a Lehman Brothers moment for the energy market. To use that analogy, a Lehman Brothers market moment for energy. Now, a lot of the conversation today focused on that, but the issue here, Matt, is that, of course, Russia could cut flows at any time. The European storage is not ready for that. We enter the winter months, the most vulnerable time of the year for European economies. And when I ask sources here, what is the plan B? Well, the issue here is that they don't have one yet.
Maria, thanks very much. Bloomberg's Maria Tadeo in Brussels. And now to UK politics, and it's a double blow for the ruling Conservatives overnight, with two defeats in special regional elections called by-elections here in the UK. But while the results raise questions surrounding Boris Johnson's election-winning potential, the Prime Minister has vowed to carry on.
We've had some tough by-election results, and they've been, I think, a reflection of a lot of things, but we've got to recognise that voters are going through a tough time at the moment, and I think that as a government, I've got to listen to what people are saying.
Bloomberg's Laura Wright joins us now from Westminster, and we only just came through a no-confidence vote in the Prime Minister. He survived, of course, but damaged by that, Laura. Now these two damaging by-election results overnight, where does that leave him?
Well, it's been a terrible night for the Prime Minister, the Conservative Party losing two members of Parliament to opposition parties. And as you mentioned, this fuels speculation that another vote of no confidence will be held against the Prime Minister sooner than the usual 12-month gap from the last, which happened earlier in June. That raises the question over who would replace Boris Johnson. Favourites include Chancellor of the Exchequer Rishi Sunak or the Foreign Secretary Liz Truss. Look, in recent months, Boris Johnson has tried to portray the image of an international statesman, but he can no longer ignore the political turmoil at home. UK citizens' incomes are being squeezed, and overnight data revealed that consumer confidence has reached an all-time low, -41. To put that in context, usually -30 is a bearish indicator. It adds to a week where inflation reached a 40-year high. Real wages are falling, purchasing power is diminishing, the economy is grinding to a halt, and interestingly, a recent poll from YouGov revealed that if a general election were held today, the opposition Labour Party would be the winner, not Boris Johnson's Conservatives.
All right, Bloomberg's Laura Wright, thank you so much. Now let's go from politics back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. I have to begin with Zendesk, which is the big software company. It is surging before the bell on reports that it's close to a deal to be bought out by firms led by Hellman and Friedman as well as Permira. That stock is up 48% before the bell. You're also seeing a gain, although not as large of a gain, for FedEx, which reported after the bell yesterday. Its earnings beat expectations, as did its 2023 forecast. The company benefiting from the higher charges it's able to charge for packages. Some of those labor supply issues are easing. That stock is up about 3%. And finally, I mentioned how it was technology stocks in China that really led the way in Asia. So no surprise, those ADRs listed here in the U.S. are also moving higher. Alibaba, one of them, up about 3% before the bell, Anna.
Kaylee, we'll get back to the bond market conversation shortly. Coming up on this program, Ian Steely joins us, JP Morgan fixed income CIO. Does he think we've seen peak yields for this year? Where do we head into the second half? And cracks in the ecosystem. How hackers stole $100 million in another crypto bridge attack. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
We are all unique. Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on both radio and television. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. We have seen something really weird happening in commodities lately. You saw a huge jump in a number of different commodities from wheat to oil, and now a lot of them have come off. Certainly oil, as I was pointing out earlier, is down almost $20 in just a week and a half. Now, is that due to recession fears? And what happens if we do go into a recession? Simon White is here from the Bloomberg MLive team to answer this. Simon, you've got a chart for those of our listeners on radio who can't see us. Walk us through what historical precedent shows.
So I think it's really interesting, Matt. We obviously have had this sell-off in commodities, as you pointed out. They've had a pretty good run over the last 2 years. Some of this could be, just good old-fashioned profit-taking. We've also seen it in energy stocks, materials as well. But if people are selling because it's a recession, historically it doesn't really make much sense. And, the chart you've got up there, if you look at the blue line, the flat line, it kind of shows that for the median recession, this going back to 1960, commodities don't really do that much over the recession. That's very different to equities. Equities sell off before a recession. When the recession begins, they sell off more, and they tend to bottom and start rallying before the recession ends. But you can see from that chart, commodities don't do that. But on the other hand, if you have a recession that's really caused by commodities, so say the 1990 recession, the 1973 recession, so commodities are the problem to begin with, they sell off, that eases the growth problem, and then you see a rally through the recession. Okay. So either way.
Okay, now before Matt was really interested in commodities, he was very interested in the yen, so I need to get a question briefly, Simon, on that. How long can the BOJ keep up with what they're doing at the moment in the bond markets?
It's getting very hairy. They're obviously buying JGBs hand over fist. They're approaching owning half the market. No other central bank has ever owned that proportion of their government debt. You saw widening in swap spreads, so people are already wanting a premium to hold government debt. Like a lot of these things, you don't know the exact time it happens, but you'll know it when it happens. It'll have big global repercussions.
Okay, and you think it's coming. Simon, thank you very much. Simon White of the Bloomberg Markets Live team. And for more market analysis, check out MLIV Go. That is the function, MLIV Go. That's the function for the Markets Live blog on the terminal. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Yields are steady this morning, but we've seen them come in dramatically over the course of the week as the market reprices the odds of a recession and what central banks are likely to do, not just this year, but beyond that. We'll discuss it all with Ian Steely, JP Morgan Fixed Income CIO, coming up next. This is Bloomberg.
Estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Moving in different directions on guns, the U.S. Senate passes a bipartisan gun safety bill by a wide margin. That happened just hours after the Supreme Court issued a landmark ruling that could lead to more firearms on the streets of big cities. A warning for investors from SocGen. If the past 150 years of financial market history are any guide, the S&P 500 may have another 24% to fall by the end of the year. And a major election upset for Boris Johnson. His Conservative Party in the UK suffers a double blow in by-elections. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons in New York. And Matt, the focus here on the politics perhaps, and indeed on the cost of living. The focus in the US, well, later we'll get some data out, won't we, on consumer sentiment, which is so crucial at this point.
Yeah, and it fell to an all-time low the last time this data point came out. So I think it will be pretty interesting to watch. I'm fascinated by the moves in the markets actually this morning. The S&P futures are up 0.2%. I don't think that's really the interesting part. We have had a turnaround in the 10-year yield now coming up by a basis point. It was down by a basis point earlier, but generally it's holding at around 310. For me, crude is fascinating. We just had Simon White on from the MLive blog. I'm a huge fan of his work, and he points out that historically, going into a recession, especially if it's caused by high commodity prices, you see a dip in those prices, but then during the recession, you can see a climb. We're seeing crude now start to climb back up again after falling from 124 last Tuesday to 102, 103 at the beginning of the week. Right now, 105.72, and this is for Texas Intermediate. Of course, Brent is a little bit higher. Finally, Bitcoin. Getting back to boring, 20,899. It seems to be holding at that round, big round number, 21,000. And of course, it moves just correlated with risk assets. So there it is. You can see it on the screen. And also CRYP Go. Kayleigh, what do you see in terms of pre-market movers?
Well, I am really focused on some of those big tech names because, as we know, they have been so pressured so far this year due to higher yields. But as we've seen yields coming in over the course of the last week or so, they are finding a little bit of relief, and that is true in pre-market trading this morning. The likes of Nvidia, Microsoft, Apple, Tesla, all higher by 1 to 1.5%. But of course, that only goes so far to help unwind some of the losses they have seen this year, all down at least 20%. Anna, Tesla's down 30% on the year. Nvidia off by 45% on a year-to-date basis, and the first half isn't even over yet, Anna.
Yeah, absolutely. So a lot to watch there. Kayleigh, here in Europe, we've got European stocks up by 1.3% this morning. Perhaps a little bit of the pullback that we've seen in yields in recent sessions, maybe giving risk assets a little bit more room to run. That's not necessarily the case today. French two-year yields, just as Matt was talking about, on the 10-year over in the United States, we see those yields just edging up a little. But the direction of travel last week was yields were going higher really quickly, and then they've been coming down this week. The pound is at 123.01 against the US dollar. A lot of politics to talk about. The risks to Boris Johnson and his leadership right now, very much the conversation here as he comes through those by-elections with 2 defeats, even if he did survive the confidence vote some months ago, or some weeks ago. The pound, though, perhaps responding to some of the eco data, it was under pressure in the earlier part of the session because of retail sales and consumer confidence. They were both weak sets of data here in the UK. Zalando, a German online retailer, down by 13%, and that is weighing on others in the fast fashion and online retail spaces. A profit warning coming after hours from this business, and we're being warned by analyst Kayleigh to watch out for more of the same from others in the sector.
Well, watch out, we will. And of course, Anna, we are also watching the bond market, as is Bill Ackman of Pershing Square. He actually says that the bond market is misreading the Federal Reserve, which he thinks might be the result of Powell's communication style. But just take a listen to one of these quotes from these tweets. The Fed has a credibility problem as the bond market flat out ignores Powell's and the governor's commentary. This must be concerning to the Fed as managing inflationary expectations is critical to controlling inflation. Expect even more hawkish commentary until the bond market wakes up. Joining us now is Ian Steely, JP Morgan fixed income CIO. Ian, is the bond market asleep?
I don't think it's asleep. I think the bond market is really
discussing the debate at the moment between inflation, which is obviously high and needs to come down, and the central banks are going to react to that. But it's also focusing on the growth concerns, and it's the growth concerns that are front of mind at the moment. And we've seen some very weak PMI data this week. We've seen some terrible consumer confidence data. You know, there's concerns about gas taps kind of being turned off to the Eurozone. And ultimately, are we going into recession? So the bond market is really trying to weigh up that dynamic. And as Anna just said, we had this really big spike higher in yields over the first half of this month. And we're seeing those yields come back down. Maybe there was a little too much exuberance around inflation at the very beginning of this month, and a bit of reality kicking in that actually there's a growth side as well. But we are still seeing higher yields on the month at the moment.
Yeah, we got a different view to Ackman's yesterday when we spoke to HSBC about the bond markets, and we were talking to Stephen Major there, Ian, and he was saying that we won't see the amount of tightening by the Federal Reserve that is currently priced into markets, because he is more focused on growth, and he thinks that those growth concerns will catch up with the Fed. So do you think, with that in mind, where do you fall? Do you think we've seen peak yields?
I think the question that we really need to ask ourselves is, where does inflation get to, and then when does it start coming down, and then most importantly, how quickly does it start coming down? Because in agreement with those comments, if you look through history, if you've seen slowing growth, rises in the unemployment rate, historically the Federal Reserve has been cutting policy. The one time they didn't do that was, of course, in the early 80s under Volcker, where they were tightening policy into a slowdown. So I think we've got similar levels of inflation concerns out there at the moment. But is the inflation structural, or are we going to see it come back down? And if we do see it come back down quickly and back down to levels that, you know, as Jerome Powell said, 3 to 4%, that means the Federal Reserve and other central banks around the world can blink. But if we don't see inflation come back down that quickly, then ultimately the central banks are going to have to keep going, and they're going to have to tighten policy to ensure it does come down and it doesn't get embedded.
Yes, so whether inflation destroys demand, I suppose, Ian, whether we see that happening and a slowdown results. Does that mean that you think it's still possible to get a soft landing, or is that increasingly out of reach? I think you've described it in the past as being aspirational.
It's definitely becoming more challenging. I would have argued maybe a couple of months ago that, yes, it looked like we could see a sort of a path to a soft landing, but we continue to see inflation higher than expected, which means the central banks are going to have to do more, and they're going to have to do it quicker. So it is becoming a lot more challenging in our minds to get to that soft landing. I guess the question then would be, you know, how negative is the recession? How deep is the recession? I think there's the debate around that, given still the pretty decent corporate balance sheets, pretty decent consumer health that we see out there at the moment.
I mean, it doesn't have to be a slowdown in demand, right? It could be a pickup in supply. I've been trying to get a General Motors truck for a few months now. They have trouble getting chips. They're having trouble building the legendary 6.2-liter V8 engine. But if the supply chain gets fixed and they can do that, does inflation come down? And could the Fed then cut rates, Ian, to reverse a slowdown in economic growth?
Yeah, and I think these are all great questions, Matt. And I think this is the supply chain discussion. We've been sitting here for the last year talking about supply chains improving, and they haven't, and we've continued to get supply chains disruption. If we do see supply come back online, then actually that will bring inflation down. I guess again the question is, how quickly can it do it? And then there's that issue from a central bank standpoint: is are they going to be able to time this perfectly? Are they going to be able to stop tightening at exactly the right time? Because we know that as they tighten, it has an impact 6, 12, 18 months down the line, and they don't know exactly what that impact is going to be. So again, that's the kind of the aspirational, that's the challenge that they're going to have, is making sure that they stop tightening at the right time. That means they can instigate that soft landing. I think that is going to be difficult.
By the way, if I look at INGO on the Bloomberg, Ian, and see all these year-to-date losses across every form of fixed income index, with the exception of China aggregate and Asian Pacific aggregate, I wonder where I would go in and start to buy if I wanted to, you know, do a little bit of bottom feeding or bargain hunting. Where do you find interesting?
So I think there has been a lot of repricing within parts of the emerging markets. So you can make a decent argument that the developed market central banks have been a little late to this tightening party. But the emerging markets were going at it last year. You've got some big moves, places like Brazil, which have hiked rates from 2% to north of 13%. So we have already seen a significant amount of repricing there. And I think there's some value to be had. And then when you look at the credit markets, as I said, corporate health still looks good to us. Maybe leverage ratios not decreasing as quickly as they were. But if you look at front-end yields there, 3.5% to 4%, the break even on them, or the amount that yields would have to rise over a 12-month period for you not to have a positive return in those spaces, they're becoming quite compelling. So I do think there's areas of the fixed income market where you should be interested in. I also think we're getting to a level now where maybe we get back to the normality of correlations, where when risk doesn't do so well, bonds start to perform again. And we're seeing that in the last few sessions. We saw that a little bit during May. And I think, again, there's an argument that if you have a diversified portfolio, north of 3% is probably not a bad time to own some core bonds.
Okay, Ian, thanks very much. Ian Stealey of JP Morgan, 2 guests in 2 days pointing out emerging market debt markets to us. Coming up on the program, cracks in the ecosystem, how hackers stole $100 million in another crypto bridge attack. We will talk about that next. This is Bloomberg.
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Well, turning now to crypto, another cryptocurrency bridge was hacked, this one amounting to $100 million stolen. It's the third major bridge hack this year. Joining us now to discuss is Bloomberg's Justina Lee. So, Justina, obviously, a bridge is a way for people to swap coins from different blockchains, but they seem very, very vulnerable. One estimate shows that more than $1 billion has been stolen from bridges. I can't imagine this helps confidence at a time when crypto, the entire ecosystem, is so vulnerable.
Yeah, exactly. I think what this is kind of showing to people is that these bridges are particularly vulnerable to hacks, partly because their technology is so complicated. Now, in this case, it seems like what happened was one particular private key was compromised, and you do need some of these keys to access the bridge, and kind of when one of them is compromised, that kind of opens it up to the risk like these.
There was actually a day on Bloomberg Television when I gifted some co-anchors some Bitcoin, and they showed the private key. It was stolen within literally like 30 seconds. But there are ways to fix that technology, right? This isn't about the blockchain. This isn't about cryptocurrency. It's really about the software that's used to move these things around after you take it off one blockchain to put it on another.
Yeah, and I think a lot of people in crypto are going to try to fix this because we're kind of moving toward a world where it's not just about the Bitcoin blockchain, is not just about Ethereum, but different, teams are coming up with different blockchains, the Binance chain or Polygon. And so kind of finding a safe way to move assets between these blockchains is going to be increasingly important.
That's important. Also important is keeping an eye on all of the latest news flow around particular coins, because some of that is spilling into other spaces, isn't it, Justina? I mean, we had Terra and Luna and Celsius and Babel and Three Arrows and all of these names that we've mentioned over recent weeks, and yet there are more coming. It seems almost daily we see other areas of the crypto space where either withdrawals are being halted or frozen. Is there a sense that we're at the end of this yet?
Yeah, it's interesting because I feel like for any economic historian, this is going to sound pretty familiar. Essentially, what we're seeing is like this domino effect of losses across the ecosystem because of counterparty exposure. And I think, one thing that's really interesting is kind of to see whether this ignites another crypto winter. And the last one, what we saw was prices just didn't really move for a real long time. And so interest in the general industry kind of waned. And, more recently, we have seen Bitcoin bounce back a little bit. Of course, that's just because sentiment across risky assets kind of all went up. But I think it's a little bit different for crypto because a lot of these assets are entirely based on, optimism, to kind of put it in a nice way. And so once you kind of have confidence buckle, I mean, you can see a lot of tokens go straight to zero a lot more quickly than I think we would see in the stock market.
But, well, because there are 20,000 tokens, right? I mean, it's unlikely that you see... I think even David Rubenstein said he doesn't think Bitcoin's going to zero anytime soon. There are still a few blue chip cryptocurrencies, if you will.
Yeah, that's right. I mean, correlations across the space is very strong. So usually if Bitcoin goes down, you will see the altcoins go down. But I think one thing that might be different this time from the last crypto winter is now we have like all these crypto billionaires who've made so much money from tokens that they might just kind of try to hang on and keep the money within the ecosystem. But so far, at least, it's pretty clear that, the weakening of sentiment is affecting, everything from stable coins and NFTs. And at least I feel like a lot of retail traders are probably going to give up at this point.
All right, Justina, thanks so much for joining us. Justina Lee talking to us about the most recent heist in the crypto universe. For more on the world of decentralized finance, less theft, tune in to Bloomberg Crypto Tuesdays at 1 p.m. New York time. Next week, we're going to speak with a superstar of the industry, Mary Catherine Lader, former rising star at BlackRock, so in TradFi, as they say, defected to DeFi. I'm really looking forward to that. Of course, Kaylee and I anchor Bloomberg Crypto every Tuesday at 1 p.m. Do tune in. This is Bloomberg.
at the Delhi airport, and behind me you can see SpiceJet's 737 MAX aircraft. said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. European gas is set for a second weekly gain as global commodity shocks continue to intensify. And of course, prices at the pump here in the U.S. have caused a lot of concern in Washington. But isn't this what we wanted? Higher prices mean people are going to use less fossil fuels. Emma Champion joins us now, Bloomberg NEF, head of regional energy transitions. Emma, it's interesting to see, you know, especially with President Biden, when he was running for office, it was all about fighting climate change and stopping people from using oil. Now he's begging producers to pull more out of the ground. Which is it?
I think we're at this point in the transition, and especially when we look at the European context, where fossil fuels were at this tipping point before with power plants and renewables before the crisis actually at that competitive point. Now we're seeing this increasingly high inflation environment with commodity prices, and this is essentially making that gap between renewables and fossil fuels become more acute. So that inflationary pressure that's being put on the economy is increasingly stressing the situation.
Okay, Emma, and also what is providing a lot of political stress at this point, and no doubt economic stress to come, is the supply of gas from Russia. It seems that Russia has been dialing down the amount of gas being supplied, and now there are fears in Germany that after some scheduled maintenance in July, there are questions being asked about whether that pipe will be turned back on again, which seems fairly extreme. What can plug the holes left by Russian gas then? Because this is what European politicians are looking to try to do.
Yeah, absolutely. In the short term, we're looking for system flexibility wherever we can get it. So that means looking at coal, that means looking at the revival of LNG imports into the European region. Now, what European policymakers are really focusing on is actually how to, in the medium term, decouple the need for gas in the European economy across industry, across power and across buildings. So the medium-term strategy is to deploy renewables at an increasingly fast pace, to deploy heat pumps to get gas boilers out of people's homes, and also increase the use of renewable hydrogen in industry. And those are going to be key drivers of destroying gas demand across the European economy.
You know, one of the many things that the Germans did wrong in recent years was to phase out nuclear power, and of course, relying on Russia for the lion's share of their energy needs maybe also wasn't terribly intelligent. Are we going to see countries moving more local in terms of power generation to cover their own needs, independence?
I think so. This focus on diversification and decarbonization, and especially the growth of renewables, will enable countries to be more self-sufficient in their energy production. But when we think about the supply chain dependencies that we have in the system, there's very much a situation where importers for clean energy projects will, we're already tracking the fact that 4 to 12% of levelized cost of electricity on new power projects is increasing those prices for developers, and that's causing many headaches across the supply chain. Now, I want to talk about nuclear because you mentioned that this is a really hot political starting point. As we know, many countries are considering whether it's worth this being a solution. From our side of things, we still think nuclear is too difficult to actually deploy as a solution because it takes a very long time to develop new capacity in the European region. It's politically sensitive and it's very expensive. What's more, when we look at how nuclear assets will actually end up behaving in the long term with our power system modeling at BNEF, we generally find that these assets are less capable of dealing with the fluctuations in wind and solar output, and so they're potentially less compatible with the future energy system.
What about gas? I saw yesterday David Weston was talking with Virginia Governor Glenn Youngkin, who was saying, we need to be pulling more gas out of the ground. Now, that's also hotly debated, right? Because fracking leads to flammable water for a lot of people. Is it the right transition fuel?
I think there's now a real pivot in the discussion from gas being seen as this transition fuel in Europe to being an energy security risk. And that is bringing up a lot of conversations around what can provide that clean backup if renewables, can't do everything for us. So at BNEF, we know that we can get to about 70% wind, solar, and storage in our electricity mix by 2035. But after that point, it becomes really difficult to actually fully rely on those sources alone. So we do need something else to bridge that gap. And up until this point, gas has been that source that we have been relying on in order to fill those lulls in renewable energy output and to bridge the gap. So I think what can actually replace gas, what can be that clean alternative? There are many technologies and certainly attention on those. We mentioned nuclear, and there are other sources as well that might be of interest, including things like green hydrogen. That's definitely a very strong political interest in the European Union at the moment.
All right, Emma, thanks so much for joining us. Great having you on. We really appreciate your NEF coverage. Emma Champion there of Bloomberg NEF. Now, a look at what else we're watching. I'm focused on Pink Floyd on this Friday. Anna, you may have seen yesterday, it's possible that this band could sell its music rights for $500 million, $500 million. I will say my first concert ever at The Ohio State University was Pink Floyd, and they're definitely one of my favorite bands of all time.
Memories.
So worth it.
Special memories. I just hope my dad has forgotten that I once, as a child, recorded over his Pink Floyd tape. You know, when you put the tape on those non-re-recordable cassettes, made them re-recordable. So now I've just reminded him that was probably a bad idea. I'm watching UK politics, of course. Surveillance is up next. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
to actually get inflation under control, especially if a lot of the supply side issues are beyond central banks and policy control.
The only thing you can do is damp demand to try to bring the economy back into equilibrium.
I would not be quick to judge that we're out of the woods when it comes to inflation.
The Fed has somewhat abandoned the specific 2% range target.
Some of the leading indicators are indicating right now we're probably in a slow patch.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thank you for being with us on radio and television. It is 6 days. Next Thursday, the mid-mark, I should say, of 2022. And Lisa, there is only one word out there: recession.
Recession, as we look at a correction and a bear market in stocks. We do see a rally continuing today, and perhaps this will be the first week in four that we actually get gains. But the nature of gains highlights the conservative nature of investors, with people hiding out in some of the safer stocks.
Well, hiding out in yield as well. Price up, yield down. We've seen under 3% in the two-year yield, 3.01%. Lisa, what have you seen away from full faith and credit? How does investment grade react to recession?
Well, it depends how deep the recession is. And this has basically been the theme of the week, the theme of the year. How deep is the contours of this recession? And if that's the case, have we already priced in a shallow one? Do you get income from some of these higher rated assets like investment grade credit? That said, you continue to see outflows that we have not seen in history from bond funds. Equity funds are starting to follow. There is a feeling that we have further gloom to go if we do get some sort of recession, which many people think is likely.
In the mid-year, I guess, and all that can be said here is we're going to readjust over the weekend and really think about the path forward. Kaylee, what is the thing you see here? Kaylee lines in for John Farrow today. Kaylee, what is the item you see into your weekend reading?
Well, I'll be looking at 10 a.m. Eastern time for that University of Michigan consumer sentiment data, not just around sentiment, which we know already is at a record low, but those inflation expectations, because Chairman Powell told us himself, Tom, he's keeping a very, very close eye on those expectations.
Bigger than claims, maybe even bigger than the retail sales. Let's dive into that right now. Kaylee, when we look out 5 years and then look out another 5 years, the basic idea, and you mentioned this yesterday, the good John author's questioning, are we unanchored?
Well, and that is something that Bill Ackman of Pershing Square raised in a series of tweets overnight, saying that this bond market, as we've seen two-year yields coming in instead of going up further, is misreading the Federal Reserve, that basically it's a communication problem on the part of Jerome Powell, when pretty much every other Fed official across the board is moving towards 75 in July, trying to forecast this, that this bond market is asleep and the Fed is going to continue out hawking itself until the bond market wakes up, because ultimately,
Lisa,
inflation expectations are becoming entrenched in this economy. And that's a problem.
Okay, folks, the Friday tape is a snooze fest, according to Kay Lines. So let me give you the snooze fest.
Tom.
Let me give you the snooze fest data check, and maybe Lisa will save us in the brief. Maybe there's an auction today or something like that. Green on the screen, as Lisa mentions, futures up 33, Dow futures up 240. The VIX is a story for me from 32 through 30, down to 28.68. I got to mention BitDog, because crypto is here, 20,700. Bitcoin's had a quiet week, which is maybe good and good for it. Oil, Brent crude 111. Dollar gives way a little bit fractionally, particularly against the larger pairs. Yen from a 136 down to 135.01. Euro 105.51 as well. And on yield, I'm sorry, I go to the 2-year yield, 3.02%. 10-year yield, 3.09%. Lisa, save us with a brief.
Well, I just want to say it is a boring tape, and that is news in and of itself. We have gotten so much volatility, and suddenly we get calm, we get stasis, we get a sense perhaps Bill Ackman is right, perhaps the bond market is wrong, but the bond market is consistently saying that the Fed will not have to move as quickly because we are already seeing a deterioration in both financial conditions as well as the economy. We're getting a latest read on that from 10 a.m. With the University of Michigan Sentiment Survey for the days of June 9th through June 20th. We're expecting it to fall to another lowest level going back more than a decade. As Kaylee pointed out, a lot of us are going to be looking at the expectations that consumers have for inflation over the next 5 to 10 years. Perhaps Bill Ackman is concerned about inflation expectations becoming unmoored, but the pessimism that businesses and consumers alike are feeling are putting a natural damper already. And you're seeing that in retail sales that are coming in, and you're seeing that as people start to restrain some of their spending. At 4 p.m., we get the International Monetary Fund's Kristalina Georgieva speaking on the U.S. economic outlook, expected to probably downgrade some of the expectations after speaking first with Jerome Powell and Janet Yellen. How does she dovetail a U.S. economic outlook with the rest of the world that, frankly, is in much worse shape by all accounts? How does she talk about the potential systemic risks emerging from that? And this weekend, G7 government leaders gather in Germany from Sunday onward for a 3-day summit ahead of the annual NATO summit in Madrid on Tuesday. How much are they could talk about inflation? What can they do, Tom, when so many of these issues are specific, idiosyncratic problems, whether it has to do with supply chain disruptions from China to the war that Russia is waging in Ukraine?
Folks, this is a really important thing, and we're not really going to cover it today because the news flow is so extraordinary. But there's this idiosyncratic item, Lisa. There's another idiosyncratic item, whether it's El Salvador in crypto, it's the Philippine election, it's Tybot giving way, and on and on. It's sort of like idiosyncratic June, isn't it?
Idiosyncratic pockets of distress as people cope with prices that they have not seen in terms of how quickly they're rising.
I'm going to make a banner for this, folks. You're not going to see it on radio right now. Pre-pandemic inflation expectations, 2.9%. Volcker inflation expectations, February of 1980, 9.7%. Eric Friedman has lived this. He's Chief Investment Officer at U.S. Bank Asset Management Group. Eric, how do you defend ownership of equities from people who say, look, we've been through high inflation before, we'll get through high inflation again?
I think, Tom, you have to really frame the part of the equity market that's going to add value in this environment. And basically, really long duration equities, so think speculative tech, those with earnings hopes versus actual earnings delivery, that stuff we think will remain for sale. So we do think that cash flow and owning cash flowing equities still makes sense. But again, I think the idea that this is hey, you have to own the whole equity tape is just not where we are right now. So inflation expectations, and I think that Lisa had a great tweet earlier in the week. I mean, when you see the 2-year move in 50 basis point clips, that tells us the market is not fully digesting what the Fed is about to say. And we are more on the bearish side. We think the Fed will be more restrictive than markets currently expect.
Eric, I love how you put it, that you're still donning bear costumes until the Fed flinches. What do you think the market is currently underestimating with the Fed? How far they will be able to go, or just their resolve to pull a Volcker, to take a more aggressive stance?
Yeah, we're normally glass half full. We like the risk premium trade, Lisa, but in this environment, we just think what's different with respect to the Fed's intention really boils down to liquidity. And we're entering a fairly illiquid, just seasonal part of the counter, if you will. And if you add on top of that the risk that M2, I think a date that probably isn't being talked about enough is June 28th, which is when the Fed will release this next M2 data source. And so bottom line is this: we think that as you have tightening monetary policy, which we think perhaps Chair Powell has been more of the good uncle, if you will, talking down or at least maybe soothing a bit of expectations. But we do think that if you add on top of the risk that M2 contracts and the Fed gets more aggressive, we think that that's a recipe for just tighter financial conditions than markets expect. So we do think the Fed has a mandate that is going to be challenged by oil prices. We also think that shelter costs remain a lagging indicator. In other words, there will be a lag effect on inflation that really boils down to higher shelter costs, which we think is going to push the Fed to be more aggressive than the market currently thinks.
Well, and we heard from the chairman on Capitol Hill yesterday saying that their resolve is unconditional in fighting inflation, which raises the question of if the Fed even is going to flinch, if it's not a question of until the Fed flinches. Given everything you just said, is this market appropriately pricing the risk out there, or do you think we have further to fall?
We think we have further to fall, Kaylee. I mean, it's a little bit like, your University of Virginia basketball team. Every once in a while, they may show some flashes of a high potent offense, but it is a formidable defensive team, and we think that this is an environment where having that more defensive cash flowing nature makes sense for investors. And really it boils down to this. We talked last time we were on about the nature of two repricing. This repricing one being a reassessment in the bond market of the Fed's expectations. We still think that first repricing, meaning it yields up, prices down, will continue on the front of the curve. The second part of the repricing boils down to later this year, and we think there's some vulnerability to S&P earnings. We do think that in nominal terms, S&P earnings have been pretty sticky, but we do think that the risk of demand destruction, that second repricing, is going up. So that's why we think there's probably a little more downside. Again, quarter end, a lot of noise in the next couple of weeks, but again, we think the bias is going to be throughout the balance of the summer, lower prices across risk assets.
God, I wait for Virginia Colgate in basketball. That will be something. Eric Friedman thing. I don't think there's anybody over 6 feet on Colgate basketball. We'll have to check that out statistically. Eric Friedman, thank you so much, from Colgate University and, of course, with U.S. Bank. As I have no idea what he's talking about with University of Virginia. You know, and Kayla, University of Virginia hockey is just extraordinary. I mean, do they even have an ice rink in Charlottesville?
They used to. I think it got torn down or converted into restaurants.
They're converted into a Denny's. Why did I know this as well? The news flow is extraordinary. Open question, Lisa, of the blur of news today, what has your attention?
I mean, it's definitely the University of Michigan Consumer Sentiment Survey. Yeah. And in that, how much does some of the gloomy rhetoric kind of be a self-fulfilling prophecy? It's all going to be about feelings today and how we affect them, Tom.
I'm going to go away from economics, finance, and investment. I'm going to go to these, Lisa, as you mentioned, all these idiosyncratic moments, starting at the beginning of the week with Tunisia essentially shut down. There's a lot of different international relations stories to watch and think about into the week, and including the president's trip to Riyadh coming up here in July. We'll have much more talk on that from Washington here. And of course, the historic judicial decisions from Washington and legislative decisions as well. On the equity markets at 7 a.m., Amy Wu Silverman. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. It's being called the biggest breakthrough in U.S. gun safety in 3 decades. The Senate voted 65 to 33 to approve bipartisan legislation that will improve background checks, secure schools, and give states money to fight gun violence. The House is also expected to pass the measure. The Senate passed the bill hours after the Supreme Court issued a landmark ruling that could mean more guns on the streets of big cities. Federal Reserve Chair Jerome Powell calls his commitment to curbing inflation unconditional. Powell wrapped up 2 days of testimony on Capitol Hill by warning that the Fed is very far from its inflation target. Meanwhile, Fed Governor Michelle Bowman told bankers in Massachusetts she supports raising interest rates by 75 basis points again next month. And in the UK, Prime Minister Boris Johnson has suffered a major election upset. His Conservative Party lost a key parliament seat in southwest England. It's the first time that the constituency, Tiverton and Honiton, has not voted Conservative since it was formed 25 years ago. The Liberal Democrats won the seat. It is an unprecedented move for China in dealing with Hong Kong. Bloomberg has learned that Beijing has asked foreign business chambers in the city how to revive its reeling economy. The chambers are said to have responded with one overriding message: end Hong Kong's COVID quarantines immediately. Hackers have stolen $100 million in an attack on a cryptocurrency bridge, an app that lets people swap coins between blockchains. Harmony says it's working with national authorities and forensic specialists to identify the hackers and retrieve the money. Crypto bridges are seen as being particularly vulnerable to hacks. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
We are all unique. Without diversity, life would be excruciatingly dull. It's something worth celebrating. It's something that makes us stronger as communities, as businesses, and as individuals.
I see the benefits at Bloomberg on a daily basis. It's beyond flying that rainbow flag. It's about taking the discussions out into the world and making a genuine difference.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
I am fully convinced that Ukraine is a European nation because they prove every day by fighting against the aggressor that they defend European values, they defend democratic values, and so they are fighting not only for their freedom, they are fighting for our freedom.
The economist from Lithuania, Mr. Nausėda, he is the president of Lithuania, in conversation yesterday with our Maria Tadeo. We will look at the domestic gun issues of America in our next hour with Emily Wilkins, with us now in Washington as well. But we go internationally here with Ms. Tadeo in Brussels. And Maria, I can only say yesterday that was a conversation of the moment. Before we get to the zeitgeist into the weekend in Brussels, what I find so important is this word blockade. Putin says there is a blockade on his isolated Kaliningrad. Is there?
Well, if you ask the Russians, they say that's the way it's heading. If you ask the Lithuanians, and remember, these are trains that cross through the country, they say there isn't. But the technicalities around it, Tom, are so important because Russia could technically use that to say this is belligerent behavior. It is an act of war and potentially target the Baltics. What changes here, and this is so important, again, when you look at the map, is that this is a NATO country, and this is coming right before a NATO meeting next week, in which, of course, the Eastern European countries will all ask the President of the United States, but also Germany, that they want more men, more weapons fully stationed on the eastern flank.
Maria, in the meantime, we heard some strong words out of Germany yesterday, including, even if we don't feel it yet, we are in a gas crisis. And then German officials coming out and saying that there could be a Lehman moment in Russia's curtailing of gas supplies to European nations. How is that being received?
Well, Lisa, I have to say I've never heard that kind of language from a German official. We all know what Lehman Brothers means. We all know what that triggered. And to use that type of language to talk about the energy crisis potentially facing the European Union really does show you the severity behind the scenes of the scenario the Europeans are facing potentially. There are real concerns today that Russia could at one point unilaterally cut the flows. The Europeans are essentially racing against the clock to get the storage ready by November. If not, they're essentially in the hands of Vladimir Putin. Now, behind the scenes, there are some concerns that that kind of language could really create a sense of panic, that could feed onto consumers. That is the last thing the Europeans want, panic, but it does catch up to the reality on the ground. The Europeans have essentially, to be very clear, 3 months to fill up the storage. Otherwise, you get to winter, the most vulnerable time of the year for Europe, and you're in the hands of Vladimir Putin. There's no other way to put it.
Yeah, of course, energy, an even bigger problem for Europe than the U.S., although that's something that's dogged the Biden administration, Emily. And frankly, President Biden is not in great domestic political standing at the moment. As he heads to the G7 this weekend, can you characterize the power he brings to this meeting versus the meeting of 2021?
I mean, it's certainly not as much power as he had previously. He's gone from having really high approval ratings to ratings that have now, in some polls, slipped under 40%. He is facing an election this November that is likely to see Republicans take the U.S. House, potentially the U.S. Senate, and that's going to really limit Biden's ability to get things done. Story on the terminal this morning talking about some of the private concerns that German officials have, saying that the U.S. has been such a leader in really keeping the EU and its allies together and putting pressure on Moscow, and worrying that the U.S.'s role is going to be compromised if they have divided government starting next year. So it's definitely a difficult position for Biden to be in. He's not coming with the same power that he did in this last time, and there are lots of questions about what the administration is going to look like moving forward.
And Maria, what are you hearing from your European sources about this, about how they view the U.S.'s ability to act as a leader here?
Look, I think I would actually tone it down big time from the international perspective. Of course, every country has national politics, and everyone here can see the polling for the President of the United States. They can see the approval rating. But the reality is that when you look at the weapons, the United States has been an incredible supplier for Ukraine, much more than some of the European countries. When you look at the money that this country is essentially paying now into Ukraine, it's huge. For the Europeans, this is still an administration that they can count on. And also, to be fair, this is not a problem that the United States has created for Europe. This is an issue in the making now for 10 years for the European Union, depending so much on Russia. And now, of course, the penny drops. This is not a problem the Americans have created for Europe. This is entirely self-made.
Marie Tadeo, thank you so much in Brussels. And, of course, Emily Wilkins in Washington. And in our next hour, for our international audience, we will address the two issues of gun legislation and judicial activity in Washington that we've seen in the last 24 hours. Lisa, to get back to what we do with futures up 31, to me, the heart of the economic analysis this weekend is which matters. Headline inflation, let's call it 8%, or core inflation, 6% in maybe declining?
Well, you know, honestly, we've heard from the Fed chair himself that they're looking at both, because headline inflation is what allows people to have higher, longer-term inflation expectations. I'm trying to wrap my head around what the 2-year yield is looking at, what bond buyers are looking at in terms of headline or core inflation, because either way, they're seeing it come down in a way that it's not in actuality. At least that's the implication by how low some of these yields have gone over the past couple of trading sessions.
Let's turn to the esteemed 21st century philosopher, Kaylee Lines. Dr. Lines, can you explain why stocks go up if there's such recession worries?
Well, the thesis being, and it's always hard to assign actual, narrative around the market action, but for so long we have seen yields moving higher, putting pressure on the real giants within the equity market, which is the large cap tech stocks, which traditionally, even those multiples have come down some, they're still richly valued, and those high multiple stocks have been pressured by higher yields. As you see yields coming in, that helps. And also, if we're talking recession, some of those cyclical value trades that have done so well this year aren't going to hold up as well in a slower growth environment. And does that mean you actually pivot back to the growth stocks, which can carry the market higher?
And Lisa, that goes to what Eric Friedman said there about margin pressure. I mean, everybody's got an angle on this, but Mr. Friedman of U.S. Bank makes real clear he sees a second tranche of margin challenges?
All I could say is you've got Meta or Facebook down 53% year to date. You look at a potential little bounce, and
So
this is
it's
not
priced
exactly
in.
a rally, right? How much is being priced in? Where is it being priced in? And what's being purchased? Because it's not a wholesale risk on, full-throated, yes, let's go kind of rally that we're seeing. It is a rotation, a tepid rotation into healthcare stocks and certain tech stocks. I mean, this is very nuanced as people try to pick up as something that can protect them in a downturn.
Let's talk about the real yield. I think this is important, folks. My entourage showed up late this morning. They're all out partying last night. And I got a 10-year real yield, Lisa, 0.57%. That's a lower real yield over the week.
This goes to the whole feeling that the Fed's not going to be as aggressive. They're not going to tighten monetary conditions. And I'll just tell you, their balance sheet hasn't come down pretty much at all. So whatever quantitative tightening,
Lisa,
I think probably should be.
That's not why I asked Lisa.
Quantitative
Tell me I'm
stasis.
not doing the real yield this afternoon for Farrow.
I don't know.
I don't,
I think the entourage is coming in.
John
Give me some
Farrow,
extra
rumored to
tang.
be back next week. Stay with us. This is Bloomberg.